Okay, are you guys able to hear now? Uh, okay, there was some audio problem. Sorry for that. Right. Okay, I think it's clear now, right? Sorry for the issue. So I couldn't figure out what exactly had happened though. Right. So right now, uh, yeah, since everything is clear, if the screen is blurred, you can definitely just change the quality to full HD. So from your settings, so you can just go to your settings and change the quality to 720p. So the stream is being done at 720p, and you can change it. So meanwhile, I'll just change the layout of the screen. So I think this layout would be better. Right. So here we have the trade, and I think in yesterday's video I had actually discussed regarding this position. So we had taken a 38,500 short straddle, and apart from that, we also have a few more 37,800 put shorted. So I'm also going to do some intraday trades today. So as of now, I haven't planned for anything. So let us see what can be a good trade and do it accordingly. So the M2M right now is around 2,78,000 from these trades. What I'm going to do is, since we are doing little bit of intraday, I'm just going to take the profit slightly off. So maybe I'll just book 50%, that is 900 quantity. So I'm going to book 50%, takes the profit slightly off, and then I'm going to continue by doing the intraday trades. So right now, I just removed 900 quantity from each by booking 50%, right? And now everything is removed. And now we'll be taking some intraday trades. So before I take these intraday trades, let me just open the chart and let us see what the chart has to suggest. So I'll just open chart on Kite. Okay, I think I just exited at the not such a great time because we had a 38,500 and the market was just moving towards 38,500. Maybe I would have got a very nice exit. So this exit was made at 129, and let me just check. So it was made at 129 and 354, and right now this has come to 311 and 150. So we didn't get a great exit, but never mind. So we have booked some profits. So now let us go to the current day chart and see what Bank Nifty has to suggest. So yesterday, as we were discussing in the video, Bank Nifty, even today, as you can see, it took quite good support around 38,200. So we had discussed why 38,200 is supposedly a good support. So when I put a 15-minute time frame, you can see that multiple times the market actually tested 38,200. So even today, the market tested 38,200 on the lower side, but it was not able to break it on the lower side. So previously, market was trying to break 38,200 on the higher side. It was not possible. But today, market tried breaking 38,200 on the lower side, and it did turn out that 38,200 was a very good support for the market. So the thing is, from there on, in the last 15 minutes, we have witnessed a very strong bounce back in Bank Nifty. And if we have to take an intraday trade now, so we will just take a look at what is the day's high for today. So the day's high for today is around 38,400, and the day's low is around 38,200. So with this in mind, right now Bank Nifty is moving up higher, so we can just wait for some time. There is no hurry to jump into the trade right away, so we can just wait for some time and take the trade accordingly. So the thing is, let us just look at what the premiums are pricing in and see if it would be comfortable for us to take a trade now. And let me just go with a 38 400 short straddle and see what the premiums are first, and then accordingly we'll be taking the trade. So right now they are pricing in close to around 450 points, and 450 points is something which we are pretty comfortable with, given the sense that on the downside we'll be having a break even around 37 800, and on the upside, uh, w- we'll be having close to around 37 950, and on the upside we'll be having around 38 850. So looking at Bank Nifty now on the charts. So it does seem that market is holding a smaller range between the day's high and the day's low. So it can be a pretty simple trade until the day's low or day's high is broken. So what we'll be doing is we'll just end up taking a simple short strangle, and we will see what we can do with the market accordingly later on. So maybe since market is finding some good support at 38 200, I will short a 38 200 puts, and maybe 38 600 calls can be a good idea. So the thing is, I'm just taking this without like, what would I say? So this I'm just taking because I expect little more market to be little bullish, and that's the reason I'm going little far on the upside and I'm little closer on the downside. So now if we go to 38 200 puts, so they are trading around 160 rupees, and similarly if I go to 38 600, or if I go to 38 700 calls, they are around 93 rupees. So this is around 126. So I would be more comfortable going with a 38 200 puts, where I'll be shorting around 750 quantity. Or let me, since we are doing live trade, let's keep the quantity lower with 600. So I'll shoot this in intraday, and even this I'll be shooting an intraday order of 600. Right. So now we have some positional trades, some intraday trades. So just to make things easier, I'm just going to take off this 25th August, and we'll just focus on the 11th August trades. So in 11th August trades, we have 38 200 and 38 700. And on the other side, we have couple of regular trades as well. So this I have gone close to around 600 quantity each. These are the intraday trades, and right now I'll just end up placing a very simple stop loss. So one thing why I'm placing the stop loss is in case if there's a sudden up move or a sudden down move, it gives me some time to breathe. In the sense, in the worst case, the stop loss will get triggered and the market will start going up. So there'll be some room for me to breathe, and that's the reason I will be going ahead with first placing a stop loss. So the stop loss, what I would be placing, can be around, let's say, around 60 to 70 points. So I'll just place this stop loss around 160 rupees, and this I would be placing at 210. So again, the thing is, I have just placed on a random basis of somewhere close to around 60 to 70 points. The thing is, I would be mostly basing my exit on the charts. So why I have placed a stop loss is in case of a sudden move, it gives me some room to exit. So the thing is, this is the trade what we have taken as of now, and these are the regular trades or the positional trades which we have carried from yesterday. And I have also discussed what is the logic behind taking these trades yesterday itself. So meanwhile, if you guys have any doubts, so you can definitely feel free to ask me. So we'll address some questions in the chat section. So we have a question from Ganesh, who is asking, "Does your stop loss change based on VIX?" The thing is, yeah, one thing is right now I'm looking at the charts. So when I open the charts here, so I'm just looking to see if the market is able to break the day's high. So I've just kept a 50, 60 point stop loss so that it gives me some room to think. So in the worst case, if I'm wrong with my view, let's say the market starts going up, but I still do expect the market to consolidate. In the worst case, my stop loss will be triggered and there will not be much of a loss. So on the other side, you will get the decay. So many times I have made this mistake previously where even during intraday trade, I don't actually keep a stop loss, but I just try adjusting and adjusting. So at a point, it goes to such an extent where I just keep adjusting the trade, and the market would have just moved close to around 400, 500 points. And the simpler solution for that would be to just keep a stop loss on the call leg, get it hit, and the put leg would have decayed and given us the profit. So for that reason alone, like today we have just entered just by keeping a small stop loss. So we can take the trades, we can either add some additional puts or we can add some additional calls according to how the market goes from here. So right now we have seen some good recovery happen in the market and the market is heading on the upside. Okay, sorry for that, guys. Okay, so the thing is, so here is a interesting question by Ajay. So he's asking, why didn't I create a short straddle at 38,400? So to be honest, like I was little bullish on the market, so I have taken a bullish bias. So now your question can also be, why didn't I take a 38,500 short straddle? So the reason is just couple of minutes back before I took the trade, I just exited the 38,500 short straddle. So the thing is, I would be entering the same thing again. So that's the reason I just ended up taking a strangle. So there is no other reason because I had just come out of the trade a couple of minutes back and I was trying to re-enter the same trade. So since this whole thing has given us quite good profit, I would be willing to take out some more, maybe another 50% more, so that we can play only on intraday and we can book some good profits what we have got from positional. So I'll just take out another 50%. So right now I'm just working with 450 quantity for positional and we have 600 quantity on the intraday end. So capital today for options has been quite less. So I would say because the most this thing has been deployed in futures also. So let me just take a look as to what is happening to futures. So most likely today futures will be in loss because the we mainly have the IT sector, and I don't think IT sector today is doing that well. So let me just take a look as what is happening to the futures. So I'll just So just a second. Expiry, I'll just change it to 25th and I'll just put everything together. So most likely we'll be in a loss with futures because we have TCS here. So you can see that TCS is M2M is minus 66K, Mindtree M2M is minus 1 lakh. And we have, so all these are futures. So from here to here, we have quite a lot of futures. So you can see that none of these have done really well. So TCS is down 70K, Mindtree is down 1 lakh. Then we have Bajaj Finance, which is down 33,000. And then we have HDFC Bank, which has given us little around 17,000 positive. So overall, with futures, we have a loss of close to around 2 lakh. But the thing is, this future loss is absolutely fine because if not today, it is going to recover tomorrow, and we are going to come to positive. So what we have to only focus on is our option trade. So that is something which we have to take care, and future is going to take care of itself. So because you can see all of them are quality stocks. So be it TCS, Reliance, Pidilite, Mindtree. So all of them are fundamentally very strong. So the hopefully these stocks will end up recovering quite soon. So let's see what happens to them. So I'll just remove these filters and come back to options alone because that is the focus what we have as of now. So towards the end, we'll see what is happening to the futures as well. So again here, I'm just going to put the filter for 11th August only. Okay, so now I'll just be discussing certain things what we can do with this particular short triangle. So we have taken this intraday short triangle, but the thing is we can fall into trouble anytime because if the market suddenly falls or suddenly goes up, we will fall into trouble. So if the market actually ends up going higher, we don't have much of a trouble because we have taken a bullish bias. So we have sold a put option which is trading around 160 rupees and call option trading around 80 rupees. But the main problem comes when there is a huge fall because we only have 80 rupees here and we have 160 rupees here. So what do I intend to do? So in case if we come down, let's say by 150 points, around 200, so I would be more than happy to convert this into a 38 200 or a 38 200, 38 300 short strangle. So meanwhile, it can also happen that this ends up triggering the stop loss as the market comes down. So it might also not trigger, but it can also end up getting triggered. So if it is not triggered, I'll just convert this into a short strangle. If in case it is triggered, then I will maybe end up shorting some additional call options because why I'll be shorting additional call options is if you look at my regular position. So even in my regular positions, I have a bullish bias, right? So you can see I have a 38,500 short straddle and I have also a 37,800 put shorted. Since I have a bullish bias in the regular position, and if I end up creating further bullish bias in the intraday position, and finally if the market comes down, then I'm going to get hit quite a lot. So what I will do is, in case if the market ends up going down, I will make my intraday positions slightly bearish, and my regular positions will still continue to be bullish. So I'll be that time playing the entire theta. So because if I just go on one side, I'll also be playing on the delta. And if the delta goes against me, it is not going to be quite good. So in case it happens so that the market ends up falling and my PE stop loss triggers, I'm going to short some additional calls and maintain some bearish bias in intraday because I also already have a bullish bias in the positional one. So if the market goes up, then we have bullish bias in positional one and intraday as of now. So it will be quite favorable, and maybe by the end of the day, who knows, we can head towards 4 lakh also. Okay, two important tips I would give for beginners, whoever is doing option trading, is that the first most important thing is you don't. So the thing is, you have to always remember. So you keep getting every single day to trade, and some days the market does not go in your favor, and on those days it is important to make sure that you don't end up losing a lot, because when the market actually starts to go in your favor, it will be quite hard to recover what you have lost. So try to control your losses and see that you don't usually make it exceed around 2 to 3%. So if you cut it before that, then it will be quite easy to recover. And second one, go with lower position size. So it's absolutely fine even if you make lesser profit. So you will be having a very easy time to manage the positions and adjust it. And even during wild M2M swings, you won't be losing quite a lot, because your psychology won't be disturbed, because they'll be having very little M2M swings. So we'll also take a look at the OI data and see what it has to suggest. So let me just open Sensibull on this side. And meanwhile, I would also like to thank all of you for showing so much support. So let's just come to the open interest part. So here, as you can see, so Nifty open interest is very interesting. So why I would say open interest of Nifty is quite interesting is because you can see today Nifty has not actually. I don't know if there is any issue with the open interest data being updated or not. In case if it is true, I don't know if what is the case here, right? So in case if it is true, then it is quite okay. I think we are at August 8th, so it's not updated. So. uh, I don't know what is the issue with Sensible though. So they haven't actually updated the intraday OI. So it's still in August 8th and we haven't come to August 10th. Because one surprising thing was, even though the market was absolutely flat, there was huge amount of put writing, which actually surprised me. But then, as we got to see now, that was not the case, because the OI here was not updated at all. So coming back to the trade, so right now I don't think we have anything much to discuss about the trade, because we had done a detailed discussion regarding the regular trade what we have, and we had also done a discussion regarding why we are taking this particular intraday trade. So we just have to wait for a while, maybe for the theta decay to kick in and for us to get some decay. I'll just be entering some more positions, maybe around 12 o'clock and 1 o'clock. I'll start entering some more short straddles, maybe, depending on how the market is moving. So we just have one internet connection. So in case if there's any drop in the connection, we just use mobile data. So to be honest, we don't have any fancy trading setups. So we have a very basic laptop and a phone, and that's all we use. And that too, the laptop is also not a very high-end one. So it is a quite normal laptop which we use. So we were planning to change it sometime soon, but as of now, we don't have any fancy trading setup. It is a very simple setup what we trade with. So I would maybe take this time to share about the ratio trades what we have done. So one of my favorite strategies, apart from the normal short straddle, is the ratio spread. So I prefer doing a lot of ratio spreads for multiple reasons, because it is quite easy for us to manage the trade. So I'm just going to share some light on ratio spreads, how you can do it, and how you can end up adjusting the trade also. So meanwhile, you can, if you have liked the content, so do not forget to hit the like button. So because just a second, guys. Yeah. So meanwhile, if you are liking the content, do not forget to hit the like button, because it just so it is maybe a way to show that you guys like the content and you also support us. So all you have to do is just tap on that like button, and so right now we have around 166 likes. Let's try to hit around 250 likes, because there are close to around 700 people watching this stream. Right. So the market slowly seems to come down, but we don't have to worry much, because we have almost taken out all our regular positions, and we are quite less on the positions right now. And coming to the ratio trades, so this ratio is something which we had taken long back, and it's right now running. But what I would rather do is show you one more simple ratio spread on Sensible here. So I'll just open the strategy builder now. So one thing what I would suggest is it's very easy to manage the ratio when you do it for the longer time frame. So longer expiry, maybe September expiry or August end expiry. So I'll also explain why this is the case, and how you can end up managing the positions also, right? So I'll just change this to Bank Nifty, and let us come to August or September 29th. So when I come to September 29th, as you can see, we have very good premiums right over here. So even at 37,000, 36,000, there is a lot of premium there. So now, if I have to look at this Bank Nifty chart, so let me just change from 15 minutes to maybe an hour. So when I take a look at this chart on the broader end, so the thing is now from here by September 29th, so I would take a maybe view saying that the markets might end above 35,000. So I don't know if it is actually going to happen or not, because it is still 3,300 points away. So I would take a simple view that the markets will end above 35,000. So now, since I have taken the simple view, so you can also end up taking your view. So let's say you go to December end and take a view market is going to end above 34,000, or whatever you are more comfortable with. Or you can also take a view saying that market is going to end above 36,000. So you can do this exercise with me, right? So just log into the chart, and just take a look at the chart, and just try to come up with an estimate. What do you think, or where do you think the market is actually going to end by this expiry? So whether you think it is going to end about 36,000 or 35,000 or 34,000. So assuming that you guys decided that the market is going to end above 35,000. So the reason why we have chosen far expiry is that you get very good premiums, right? So in this case, let's say we have 30. So we have decided that the market is going to end above 35,000. So we can do a very simple ratio spread by just buying 35,500. Sorry, 36. You can also go and buy a 36,000 put option, which is right now trading at 344 rupees, and end up selling two lots of 35,500 call option. So you can see, so easily you were able to make a ratio spread. So by buying a 36,000 put option, by selling two lots of 35,500 put option. So you bought one in the money option and sold two out of money option, and you were able to simply create a great ratio spread which has 87% probability. And I will be telling you or discussing more about the advantages of ratio spread and how exactly you can end up adjusting the ratio spread also. First, I just want uh, to make it clear as to how exactly you can make a ratio spread. So now let's say your view is something like the market is going to end above 36,000. So what you can end up doing is you can end up buying a 37,000 put option and sell two lots of 36,500 put option. So you can see that very easily you have put your break even somewhere around 35,680. So ratio spreads have a lot of advantage, but I just want to make sure that you guys are clear with how exactly to make a ratio spread. So you can let me know in the chat section. So you can open Sensibull side by side and just pick a view on the market. So what do you expect or where do you expect the market to end above? And pick a view and start creating ratios, and do share it in the comment section so others can also end up seeing it. So one more simpler ratio to get a even broader and much better break even is, look at these, right? So 37,000 put option is 552. 36,000 put option is 347. So when I do 347 into 2, I'm going to get close to around 700 rupees. This is 500 rupees. So look at this, how broader range I'm going to get. So I'm going to get a range of close to around 34,850, and I will be at the highest profit during the bad time. So like when the market is around 36,000, I will have my highest profit. So always make sure about one thing, right? So when you double the premium of the sell leg, so here, let's say the sell leg is how much? 36,500 is 436 rupees. So when I double the premium of sell leg, it is going to be 870 rupees. So this double the premium of sell leg should always be greater than the premium of buy leg. So if I am buying 37,000 puts, so the sell leg, 2 times the sell leg should always be greater than 1 time the buy leg. So always make sure that you end up getting the credit. So how can you get the credit? Only if your sell value is greater than the buy value, you end up getting the credit. So this is the first thing you have to note in mind, that always try to get the additional credits. So make sure that your sell value is greater than the buy value. When you do 2 times sell value, it should be greater than your buy value. So now, even to play much safer. So the thing is, the more distance you go between the buy and the sell, you will be playing very safely. So the farther you go between the buy and the sell leg, you will be playing the game more safely. Right. So the thing is, first, maybe you guys can let me know in the comment section whether you guys are following this thing before we actually move on to discussing the advantages and adjustments related to ratio. First, I just want to make it clear that you guys are understanding what exactly we are doing. So the most important thing is to make sure that your sell leg, 2 times your sell leg should be greater than your buy leg. Always try to get some additional credits. And the second thing what you have to keep in mind, is the farther you go, the more distance you maintain between your buy leg and the sell leg, better it is. So now, for example, this is 550 rupees. Let's say I end up buying this one lot. So 550 rupees, I can go and sell 35,000 puts, 3 lots. So I'm creating 1:3 ratio. So I'm getting 630 rupees here. So you can see where my break even is going to come. My break even is going to come somewhere around 33,900. So even though I have done 1:3 ratio, I have a very good break even, which I can end up maintaining. So similarly, the only key to ratio is to make sure that you always have your total credits more than your total debits. So I'll be discussing more about the target app and how you can automate your strategies, and I'll also discuss slightly bit on creating strategies using stock mark. So we'll be discussing all of this today. So first we'll complete with this ratio. So once this is clear on how to build a ratio, see what is comfortable for you guys. So you can also go with 3 lots of 35 500. So that is also going to give you a very good break even and very good profits if you're ending on the upper end. So choose your ratio accordingly. So you can work around multiple ways. And why I'm telling go for farther expiry is you can only go a bigger distance if you go for little far away expiry. If you come to close expiries, you don't have this freedom of going so much far away. Let's say I sell a 38,000, sorry, I buy a 38,000 puts. So you can see that I don't have much of a freedom. Maximum I can go if I want to do 1:2 ratio is 37,700. So anything if I go below 37,700, I won't be getting any profit. So even at 37,700, I don't get much of a profit, just around 100 rupees if the market actually ends higher. So it is quite easy to play ratios with longer time frame than playing it with shorter time frame. So now, once this is done, and once you have understood why exactly we are using the longer time frame and how to create the ratio, so now I'll be telling about what to do if the ratio starts to go wrong, right? So let's create a simple ratio of September 29th itself. So maybe I will end up buying one lot of 37 500 puts and sell 36 500, maybe around 2 lots. So this is a very simple ratio spread what I have done, and we'll be making around 2000 rupees if the view is right. And in the best case, we might end up making somewhere around like 30,000, but this is a very best case. So it is not going to be so easy. So imagine if you end up making 30,000, you will be making close to, on the capital required is 1.4 lakh. So you'll be making close to around 30%. But in case if you don't end up making so much, if you're just right with your view, you will be making 4% in 2 months. So like not even 2 months, 1.5 months, you'll end up making 4%, which is a very decent return. And that's the reason we had also entered a ratio spread in August 10. So we entered this during July itself. So now we'll be doing one more ratio for September end because it's quite easy to manage these ratio spreads. So one thing you have to note here is you have 50 days to expiry. So out of this 50 days, you will have more than 20 days in holidays itself. So 20 days will just go like that. So you have to focus on remaining just around 30 days or maybe around 35 days. So now you can look at it. If the market falls suddenly, you're going to have a big loss of 18,000 rupees. So there is no doubt about this. The loss is going to be somewhere around 18,000 rupees. But it's very unlikely that the market is going to drop somewhere close to around 7% tomorrow overnight. Even in spite of that, you're just going to have a loss of 18,000 rupees, which you can definitely handle, right? So now, just go just around, say, around 20, 30 days forward from here, right? So now you can see that the best part about ratio is if the market is staying in this range itself, so maybe slightly higher or in this range. So within the next 20 days, you already end up making 4% return. So you don't even have to hold it till the end. So within next 20 days, you would have already made the return. You just take it out and you're done with your trades because you are not aiming for this profit. You're always try to focus only on this profit. So your maximum profit is 4,200 rupees, and after 20 days you would have already got 4,800 rupees, which is 4% of your capital. Just take it and move out, and you will have quite a good room because even if the market comes down quite a little, let's say even if it comes down by 3%, you'll still be in profit after 25 days. So just take it out, book your profits, and get out because you will be having around 3% of return just in matter of 20 days, right? So now, if you give it further more time, let's say the market slowly starts coming down, does not come immediately. So let's go around another 20 days further. And now you can see, even though the market has come down close to around 5%, so 5% is close to around 1000 1800 points in Bank Nifty. Even if it comes to around 36,700, you can still end up exiting the trade with well over 3% return. So you don't have to hold this trade, you just end up exiting this trade, right? So you would have made well over 3% return in just around 30 days. So obviously, if you give it more time, at this point, you would have. The thing is, after you, let's say, pass around 15, 20 days, so you would want the market slowly to come down for you to make the highest profit. So if the market slowly starts coming down, by this time, even if the market comes down, say around 5%, or even if the market comes down to around 6%, so 6% is close to around 2300 points, you would have still made close to 8%, 8000 rupees, which is around 8% return on your capital. So you're seeing that how easy it is. The thing is, as you give some more time, the ratio is going to give you more and more profit, even though the market starts moving against you. If the market is in favor of you, you would have made most of the profit right then within the first 15, 20 days. So if the market starts moving against you gradually, still then you will end up making more profit. So instead of just getting 3% on a normal return, you're almost getting somewhere close to around 6 to 7%, uh, like that itself. So as the ratio slowly moves towards the highest profit point. So now is the important thing: what if there is a sudden fall? So we are only concerned about taking care of this sudden fall, where I'm going to discuss two adjustments what you can end up doing, so if this sudden fall happens. So before which, I just want to make it clear from you guys whether you have understood what we have discussed up until now. If there is any doubt, you can ask me in the live chat section, and I would be more than happy to address that. And meanwhile, if you are finding this session useful, so then do not forget to hit the like button, and also share this video so that more people can join this in live stream. And also do use your social media to spread this, like to share this video and spread awareness about the option trading. So how do you decide on the buy leg? So that is something which you can see what you are more comfortable with. So let's say the same view can have various buy legs. So for example, let's say you expect the market to end above 35,000. So you can make it a simple strategy where you end up selling two lots of 35,500, and you buy one lot of 36,000. So you get a break even at 35,000. So you can also end up buying 36,500 one lot, and selling 35,500 three lots. You still end up getting a break even well below 35,000. And you can see your best case profit now is around 9,000 rupees. So similarly, you can choose where do you want your buy legs and where do you want your sell legs, depending on what you're more comfortable with. So let's just go back to the old trade, before which we'll just see what is happening to our M2M on the other hand. So the market seems to be right there, and our M2M is also right there itself. So we haven't seen much of decay happen from the last time where we left off. So I'll just go back to the previous trade. So I think we were at 36,500 and 36,000, if I'm not wrong. So this is two lots. So most likely we were in this trade, I suppose. So okay, like let me just continue with the adjustments. So it doesn't matter what ratio it is, so the adjustment still remains the same. whether it is this ratio or any other ratio. So we would still be having the same adjustment. So now we will be coming to the adjustment part, which is the main part of this particular ratio spreads. So in case if something goes wrong, how do you intend to adjust these trades, right? So this thing, I would want to split it up into two. So I'll just be opening Excel to explain this better. So now we have, let me just split the positions, right? So we have 36,000 P, 30, another 36,000 P by, and 36,500 P sell. So I hope you guys are clear with this. So I have just split the position. Sorry, this is going to be sell, sell, and buy. So we have just split the position into three here. So 36,500, 36,000, and 36,000. So now all we are going to do is once when we split the position, just focus on these two, 36,500 PE by 36,000 PE sell, right? So just focus on these two. So if you look at the ratio as a whole, right? So if the market ends up coming down, then it is a negative for you, correct? No, because you are going to get into huge loss, and the loss on the downside is unlimited. So it is not going to be such a great thing. But when you actually split up the position, so when you just focus on these two legs, so I'll just make this one. So you can see it is actually, if you just focus on these two, it is actually good if the market comes down, because these two legs alone is going to give you the highest profit when the market is down. So when you're focusing on these two legs alone, it is actually good that you expect the market to come down. So that means if the market is going up, then only this single leg is what is giving you the profit, and only this single leg is what is giving you the trouble if the market falls. So everything is dependent on this single leg alone. So if the market is falling, then this is the leg which is giving you trouble. If the market is going up, then this is the leg which is giving you the profit, because these two legs will only give you profit if the market comes down, and if the market goes up, these two legs are actually giving you a loss. So we'll just mark this in green just for bifurcation. So now, even if the market ends up falling, so we don't have to worry about these two legs, because they will definitely be giving us profit. So market would have fallen and we would be making very good profits with these two. So right now also, I think the market is slowly coming down. Let's just take a look at what is happening to the position. So we are around there itself, and not much changed from where we left off with, but we will slowly start, our profits will slowly start reducing as the market starts to fall. So the thing is, as the market falls and as this hits the stop loss, I'll enter further more bearish positions, because we have quite a lot of bullish positions already done here. So if the market is continuing here, then there is no need to worry. In case if the market ends up reversing and going down, then we'll end up doing small adjustments, right? So let's come back to the ratio discussion. So, because these two legs will be giving you profit when the market falls, so we'll just forget about these two legs. So, if the market goes up, then there is no issue at all. That means we have to only worry about a single 36,000 put leg short. So, how are we going to manage this single 36,000 put leg short? So now there are a couple of ways how you can actually end up managing this particular position of 36,000. So one, you can end up creating short strangle. So because right now you only have this 36,000 put position. So as the market starts to fall, just create some additional short strangles, maybe something like by shorting a 39,500 call, or you can also end up shorting something like 40,000 call or even 38,000 call. As the market starts to come down, you can end up shorting additional call option. So all this adjustment is just because for this single put leg. So the other put leg and the buy put leg and the sell put leg will take care of itself. So you only have to focus on this single put leg. As the market comes down, in the worst case, you can also end up creating a short straddle. So you can just go and short a call leg. So you obviously can't do it right now. So as the market comes down, you can just convert this whole position into a short straddle. So if we open this, so these two will be taken care it's by itself when the market is actually down. So with respect to these two, so we'll short some additional call option. So first convert it into a triangle and then create a straddle. Just a second. Hi guys, sorry for the abrupt cut. So like I got an important call and had to attend that. So like we left off at adjustments of the ratio, and as I was telling, like you can convert this naked put sell leg into either a short strangle or a short straddle. So very sorry for the abrupt cut which we had to get. So I hope it's audible now. Okay, thank you so much. Yeah, again, and sorry for the abrupt cut because we had to take an important call. So I also want to know, yeah, like whether this part of ratio is understood. So the whole idea of ratio is you will be having a, so this is essentially a bear put spread. So you're having a bear put spread plus a naked sell leg. So the bear put spread will take care of itself when the market ends up coming down. So you only have to worry about the naked put short what you have, and this can be adjusted either by shorting a call and making it a strangle or a straddle. So in the worst case, you can also do martingale, but I wouldn't suggest martingale because it would be increasing your exposure quite a lot. So you can either end up making this into a straddle or a strangle. So that would be the best way to adjust is what I would say. So and in case if you breach your break evens and you're feeling uncomfortable to hold the trade, it is absolutely fine. So I will tell you why exactly it is absolutely fine. So let us assume, so after 20 days the market ends up coming down to this level. So at this point, let's say after 20 days, the market ends up falling around 7%. You end up losing around 8,200 rupees. But in the best case, you will again end up making 5,000 rupees. That means even if you go wrong once, right? So you don't even have to adjust this trade. Just leave it as it is. So no need of doing any sort of adjustments also. So just leave it as it is. So even if you go wrong once, so all you need is two good trades to come back, because this is going to give you 6,000 rupees when you're right. So you're going to lose 8,000 rupees when you're wrong. But you are working with a risk to reward of almost around maybe 0.8 is to 1, but the probability is around 85%. So this is where the major difference comes. So even though your risk to reward is lesser than 1 is to 1, so you're working with a probability of 84%. So even without doing any kind of adjustments, you can still do very well by doing simple ratio spreads. So I hope that you guys have understood the concept of ratios, like what exactly are ratios, how exactly you can end up doing ratios, and also what are the ways you can adjust. So when you can book your profits, what is the return you can expect, and also when you can end up booking the entire trade. So whether you want to adjust or you just want to book the loss and continue with the trade like one more time, so even that can be a very good option. So you don't have to worry about adjusting this position and creating a mess out of the position. So market is going down, but since we are quite low on quantity, so it won't be affecting us much. So now what I will do is so we like one thing I would want to make it clear is we'll just keep this interactive session, so you can look at this regular position and tell me whether it's bullish or bearish bias. So it is obviously the bullish bias because we have 36 38 500 short started, plus we have also shorted some additional put option. So definitely we have quite a lot of bullish bias. And this right now is also uh, in terms of bullish bias itself, because you can see this is trading at 172, this is trading at 68 rupees. So what I would do now is this trade overall has given us a profit of close to around 4,000 rupees. So I will just remove this call leg and maybe come one closer. Instead of 38,700, I'll come to 38,600 call leg. So the reason for this is fairly simple. It will give me some more room in case if something starts to go wrong. So I'll just enter 600 quantity and I will just exit this call leg of 600 quantity. So you can see that I have done a simple shift here, and the idea is very simple. Just by doing this, I have got some extra room to play around with. So this was at 60 rupees, this was at 90 rupees. So this has given me extra 30 points. But still, in spite of this, the bullishness is still maintained. So this is trading at 100. Put option is trading at 180 rupees. This is trading at 87 rupees. So I am maintaining the bullish view, but I have shifted the call leg so I get some additional room. So now what I have to do alongside is definitely cancel this stop loss at 160 and place a stop loss for this particular leg at 160. So why am I choosing 160? There is no particular reason. So I'm just placing a stop loss so that we have so we don't really have to keep monitoring the position continuously, even if the stop loss is triggered. So we are guaranteed that the other leg is going to decay and give us some profits. So I'm just going to place 160 rupees stop loss for both and set it. So ratios generally work in all the markets, and they work best when the market is actually coming down. VIX will be very high, and you get very good premiums for far OTM options. Sorry, far expiry options, and even far OTM options. So there'll be very good premiums, and they work really well when the market is actually coming down. So one good thing is I will also maybe end up shorting around 450 quantity of this particular call option as an adjustment for this naked put option. So this I will only do if I feel market is a little more weaker. So if we see that the market is not able to hold and it's breaking down, so right now we have put an hourly candle. So if I make it 15 minutes, if the market is not able to sustain above 250, then I will short some more call options so that my bullish bias will be slightly brought down to lesser bullish bias. So that is the whole idea what we'll be looking at. So Nifty, I do expect Nifty to consolidate between 17,500 because there's a very good support coming in at 17,200 and very good resistance at 17,800. So 300 points up and down. So it should likely consolidate between this range. The only issue is we have the only issue that we right now what we are facing is that we have very good FII buying happening, but on the other hand, the global cues are not so positive. So if global cues turn positive, then it is going to be very good for the markets. But right now, since global cues are negative, but we have FII buying coming in, so all the factors are not supporting the uptrend. So that is one major issue what we are facing. So in case if the global cues were positive and if FII buying had come like the way we are seeing, so again, we would be definitely up by 110, points quite easily. So since we have taken out most of our profits in the morning itself, so that's the reason, even though market is not really in our favor, so it has slightly come down, we are sitting with quite good profits for the same reason. And we will also end up making this very bullish position into slightly bullish in case if the market starts to fall below 38,250. So till then we will end up holding the same position. Meanwhile, if you guys have any questions, you can definitely ask that in the live chat section. And also you can do hit on the like button. So right now we have around 600 people streaming the live stream, and we'll try to make the likes go to around 600 from 500. So any questions you guys have, I'll be happy to take them. And post which, after addressing some questions, we'll be taking a small break and we'll be coming back again in a while. So anything is there, you can definitely let us know in the comment section. Okay, so we have quite a couple of them. So the first one being intraday trade, how much capital? So as I told you, like we don't really bifurcate it into intraday, positional, and so on. So generally, these were the trades which we had taken intraday on Monday. So we liked the trades and we just carried it positional. So it was just carried on to positional from intraday. So we don't do a lot of bifurcation as to this is for intraday, this is for positional. So in case if you are comfortable having more quantity intraday, we'll just shoot more quantity. And even in positional, if we feel maybe we are confident to carry it forward for the next day, we will end up doing that. So if Bank Nifty breaks 38,200, so then obviously, so this straddle, I won't be doing anything much with this particular short straddle. So this stop loss would have been triggered and we'll only be left with this call leg. So the position, so this call leg will start acting as a hedge for this put leg. So let me just explain this again. As the market falls, so this put leg will trigger the stop loss. As this put leg triggers the stop loss, we'll be left with this call leg. So this call leg will automatically act as a hedge for this put leg, not a hedge, so a counter trade for this put leg. Along with that, we will also end up having a short straddle at 38,500. So our view from very bullish would have come to mildly bullish because of this particular stop loss getting hit. So automatically the adjustments will take place once the stop loss gets triggered. So if not, then we already have a bullish position. As the markets move higher, we might expect some more decay to happen and the profits to shoot up. So as we move towards 11:30, 12 o'clock, we will end up taking some additional intraday trades, maybe do a simple short straddle, because it does look like that the markets are consolidating. So I'll just do a short straddle at around 11:30, because in case if the market starts to trend post that also, it is going to be quite okay because we would have our stop loss in places. So we do system trading. So the thing is, I would also show this to you. So as we have come out with a new platform called Target, so that will help you automate the entire trade. So I'll the thing is, I'll be showing that how exactly you can do live system trading, or how can you execute the live trades automatically in a while. So like first we'll just enter the 11:30 trade, then I'll show how you can use Target to automate. So we'll be maybe around 1 o'clock. So morning there were some issues reported in Target, so that's the reason they are getting fixed. So otherwise we usually punch in our orders through Target itself. So right now there were some issues at the server end which was reported, and that is right now getting fixed. So as soon as that is done, so I'll be showing you the live execution of system trades from Target. So here we have a question where Naresh is asking that he had done a 920 straddle and the stop loss has got triggered and what to do. So uh, yeah, so the thing is, when you're doing a system trade, let me tell you, there is no need to do any kind of adjustment because it's a proper system what you're following. So the thing is, only if you're comfortable, you can end up adjusting. But I would suggest do not keep adjusting the system trade. Just leave it to the system. In the longer run, it will take care of itself. So system trade, you don't have to do much of an adjustment. And even one day, if you get a loss, it's totally fine. You don't have to worry about that so much. So we have Kamal sir who had asked a question about courses. So we do have two free courses. So the thing is, if you go to courses.optionables.in, so let me just show you. So just go to courses.optionables.in. And the thing is, the coupon codes for these courses are put out in the description. So the most important thing what you have to do is apply the coupon. So if you don't apply the coupon, you won't be getting the courses for free. So the coupon codes are put out in the description. So you can definitely check it out and get both these courses for free. So we already have close to around 19,000 people who have enrolled for this course and around 16,000 people who have enrolled for this course. So you will get both the courses for free. Just make sure that you use the coupon code put out in the description. So Ironfly can be made during any market condition, but again, it is if the market is trending, then you will have to do some adjustments to come to profits, because right now the market is definitely trending and you won't be able to make profit unless you end up adjusting the iron fly. So if the market is consolidating or if it is in a range, then you can definitely make do iron flies and get very good profits. So I would than doing iron fly, I would definitely prefer hedging. Sorry, instead of hedging, I would definitely prefer going naked and having my position size lower. So since it's around 11:30 and the market is just consolidating, so let's end up entering some short straddles in Nifty. So let's go ahead with 38, maybe 300 and 400. Let us just take a look. So I'll just go 38 300 and 38 400. So 750 quantity. Let me just do it in intraday. So we are carrying some more short straddles here. So I'll just place a simple, maybe around 80 point stop loss. So again, I'm not using any particular logic here for placing these stop loss. So generally we do system trades, we will automate it completely. But today we haven't been able to do that because there is a small issue that is being faced by Target. But as soon as we are done fixing that, so I'll be showing you live execution, and I'll also show you some strategies what you can build and backtest from Stockmark, and how exactly that is going to work. So we'll be discussing that as well. So I'll be placing a simple stop loss of 80 points. So for call leg, I'll be placing somewhere around 260 rupees. And for put leg, I'll just place it at 280 rupees. Or I'll just place little lesser stop loss like 270. So we prefer Bank Nifty more because when you're doing short straddles, you either want the theta decay to happen, and obviously more premium is with Bank Nifty, or if that is not happening, you want the market to trend. And again, usually Bank Nifty trends more than Nifty. So for both the reasons, we would prefer doing short straddles in Bank Nifty compared to Nifty. So as I already told you, even if the market opens 2% gap down, you will not be in any trouble. So if it opens 5% gap down, still you will be losing around 10,000 to 12,000. So then you decide what do you want to do, whether you want to end up holding the trade or you want and adjusting that, or do you want to exit it. So even if you take exit one time, it is absolutely fine because it comes with a probability of close to around 80 plus percent. So you will be making that quite easily in next 2 or 3 trades. Okay, so similar to put ratio spreads, you can also end up taking call ratio spreads. So that is one question what we have. So even that is going to be quite good. So the thing is, put ratio spreads, especially if you take when the market falls, that is going to be the best because the premiums would have shot up because of high VIX. So when the market falls, the volatility increases, so the VIX shoots up and also your premium shoot up to next level. So it would be very nice to do ratios, especially when there is high VIX. So call as the market starts to move higher, your premiums reduce and it won't be as attractive as your put likes. At what time the theta decay is maximum? So the thing is, what really happens is options are affected by multiple factors. So it is not just the option price coming down need not be just because of the theta decay. So theta decay will be happening irrespective of whether market is going up, down, or volatility is high or low. So theta decay will happen irrespective of all these factors. But what will end up happening is sometimes the option prices don't come down. So the even though the theta decay would have happened, option prices don't fall. The reason for this is the vega would have increased. So if the option iv increases, so that will make the option prices shoot up and it won't fall so drastically. So we'll just check with the coupon code once again. So the thing is, only one issue what would have happened is if you haven't clicked on apply. So let me just show you. So we would have used most of our accounts, and let me just try to log in with this. So you can just click on this, click on use coupon, and type in option 100, and click on apply. So this course will become completely free, and all you have to do is type in your phone number, and you will be able to purchase this course. And even for this course, you can just click on Optionable 100 and just click on apply, and this course is going to turn free. So you can just use these coupons and avail these courses for free. So if you have maybe forgot to click on apply, so this might be one issue what you would have faced. Low capital strategies, you can go with simple spreads. So for spreads, you just have to take a view whether you're expecting the market to be bullish or bearish, and then do a simple bull call spread or a bear call spread, and that is going to work very well. So you can also do it with puts with a simple bull put or a bear put spread. So double ratio spreads, in the sense you're essentially you will be end up doing a short strangle, a naked short strangle plus a iron fly. So that is going to be the double ratio spread. So you're doing a short strangle plus an iron fly, sorry, iron condor. So that when you do that, you will get your double ratio spread. Yeah, you can end up doing. Uh, you can end up doing. You can end up placing your stop losses based on the VIX level. So if the VIX is high, then actually it plays out in two ways. So in my opinion, it shouldn't be making a lot of difference. So I will tell you why. In case if the VIX is high, generally the market will end up trending, and if it actually ends up hitting your stop loss, it early, it is very good for you because the other leg will give you the full decay. And on the other days, like you told, there are chances that both the stop loss might get hit. So in my opinion, there shouldn't be a lot of difference when you actually do the strategies with low VIX. Sorry, you keep a stop loss with low VIX or high VIX. So one or the other day you are going to get compensated, in the sense, let's say one day the market might just trend around 700 points and your stop loss would have hit quite early. The other leg will end up giving you the entire decay and make up for the loss whenever it has hit the double side stop loss. Currency options, we haven't tried, but I have once tried commodity in crude. So I had just taken two trades in commodity, crude oil before. So in one trade, we just gave it a try in Zerodha, and in one trade we got around 10K, and one more trade we lost around 8K. So after that, just sticking on to options. So counter adjustments can be done when we completely turn one side. So in the sense, let's say all my call legs have hit the stop loss and I don't have any put legs. So then it makes sense to do counter. So right now we are not in such an imbalanced position if you actually look at it. So doing a counter right away wouldn't be a good option. So in case if it falls and as my put leg hits the stop loss, it will get balanced automatically, because if one put leg hits the stop loss, then automatically the very bullish position is going to get converted into slightly bullish position. So it is getting adjusted automatically. So that's the reason we won't be doing any counter adjustment or shift. I think we ended up doing one shift adjustment today, that is exiting this 65 and coming to this 92 rupees. So today we would have used a little extra capital because we have a lot of trades in futures. So futures, I think we have taken a hit of close to around 2 lakh. So that's what we saw in the morning. So let's just take a look at future positions and see what they are suggesting. Okay, so now I think we have taken a much bigger hit than 2 lakh. So we'll just put the futures alone. So we have 2,70,000 lost from futures. So you can see TCS is down by 93,000, Mindtree is down by 1 lakh, and we have Bajaj Finance down by 53,000. So we have taken quite a big hit from futures. But the thing is, since it's futures end of the day, so these are bought more like investments. So they are going to recover sooner or later. And as the market starts to trend higher, we are going to book all of these and exit out of these positions. Anshuman sir, thank you for the super chat. So it means a lot. And yeah, like coupon code should be applicable in the sense all the coupon codes are working. In case if you are facing any issue, just drop a mail to contact@optionables.in with your phone number. So our team will get in touch with you and help you get the courses for free. So 50 to 100 lots, Nagraj sir, is something which I wouldn't suggest to go immediately. So it it might have. So the thing is, there will be some situations when it would have worked, some situations where it might have not worked. So uh, yeah, just a second. Here, I think. Yeah. So there might be some situations where it would have worked, some situations it might have not worked. So that's the reason I would say go with lower position size. It's okay when if we end up making lesser profits. It is good as long as we keep our position size low. So we won't be falling into much trouble. So we'll be coming out with two new courses also. So even both of them will be available for free. So one is regarding the trading psychology, which we are currently recording. So then the other one would be with regards to building algo systems and automating them. So we'll be coming out with both these courses quite soon. So the thing is, here you can see 38,300, which has been shot in regular. So that so right over here, you can see at 11:50, two orders have got executed. So I think the algo is working again, but we'll be showing you the demo, the complete demo very soon. So you can see, so these two orders are shot by target exactly at 11:50. So I think most probably the development team was trying in the back end, and that's why we have got two orders shot here exactly at 11:50. So this 25 quantity and this 25 quantity. So I'll just come out of these quantities. So I'll show you full end-to-end working maybe towards the day end, or I'll make a separate video on that to show how exactly everything is functioning. Okay, we will definitely do a video on iron fly adjusting. But in my opinion, if you have done an iron fly, I don't think there is requirement to do a lot of adjustments for iron fly. So because we personally prefer doing a lot of naked short straddles or strangles. So very low quantity naked short straddles and strangles, because the advantages are, especially when you have your view right, you get the decay irrespective of what. With respect to iron fly, what will happen is even the bilex will end up decaying as much as the cell lex, and you really don't get the profits till the end. So that is not the same case with naked option selling. So even if you have your position size low, it is not going to cause you any trouble. So there's always this myth saying that like option selling comes with an unlimited risk, unlimited loss. So there is nothing called as an unlimited risk or a loss. So let me just show you why. So as I come over here, so let me just open Sensible again. And when I open strategy builder here, now let's say I have a bullish view on the market, right? And let me just go to Bank Nifty here. So I have taken 38,500 short straddle. So now I have 450 quantity, which is close to around 18 lots. So I have gone around 450 quantity, which is around 18 lots. So now my question to you would be, so when people say unlimited loss, so what exactly are they referring to? So let's say tomorrow there is a 10% gap down. So even with a 10% gap down, you are losing close to around 10,000 rupees. Sorry, 10%. So you're losing close to around 16 lakh rupees, which is 3% of the capital. So when Bank Nifty has fallen 10% and you have just lost 3% of the capital, where is the question of unlimited risk? Let's say tomorrow Bank Nifty goes down to 10,000. So it gaps down only at 10,000. So your loss is 1.3 crores, which is 20% of the or 22% of the capital. When Bank Nifty has fallen 60% and you have lost 20%, where is the question of unlimited risk? So that's the reason we are okay with going completely naked as long as we have our position size low. Because if we have our position size low, very hardly or very rarely you actually come into trouble. So even if Bank Nifty becomes zero tomorrow, you're going to lose somewhere around 1.7 crores, which is not even 40% of the capital. When Nifty has gone down to zero, you forget about your options, all your equities will be zero. So you would have made much bigger loss trading in equities than trading naked options. So people only talk about unlimited loss when they do not have proper control over their position size, when they recklessly go around with a smaller capital, when they end up going around 40, 50 lots. So that's when they actually face the issue. So when you have a si- proper position size, so there's no issue, like there's no issue in just going naked. So that is something which we will have to keep in mind. So I'll tell you one advantage of going naked. So let me just come to 18th of August. So I'll just change these two to 18th of August. And I'll just reset this. So now my question would be, so I'm going 18 lots for 18th of August. So the question would be, let's say I end up buying a hedge, right? So I go 1,000 points away to buy a hedge. So how much is 1000 points away hedge? It is going to cost me 173 and 69. So it is costing me close to around 200 rupees to buy the hedge. Forget about 1000, I'll go even 1500 points hedge, right? So it is costing me 27 rupees plus 99, which is 120 rupees. So 120 rupees every single week. So just do the calculation. So we are paying around, so let's just round it up to 150 rupees every week. And we have 52 weeks, right? So in hedging itself, I would have lost close to 7,800 points in hedging. So just do this math. So you're losing 7,800 points by hedging 1,500 points away. We are not even talking about close hedge like 1,000 or 500. So by hedging 1,500 points away, weekly, on a weekly basis, you end up losing close to around 150 points, which is around 7,800 points a year. So now you tell me, which is more likely to happen? A 7,800 point gap down. So, do you really expect? So, this 7,800 points you will be losing irrespective of whether a market stays flat, goes up, goes down. You are definitely going to lose this 7,800 points because this is your hedging cost. So, now what I would want to understand is, do you really expect the market to gap down 7,800 points? Even if it happens by chance, there is a 20% gap down and Bank Nifty tomorrow itself opens at 30,000. Even in that scenario, you're much better off. So, why are you much better off? Because either ways, you would have lost 7,800 points. Even here, you are getting close to around 1,000 points as this thing. So let me just come over here. So you're getting 1,000 points right over here. So you would have lost just around, even in spite of a 7,800 point gap down, you would have lost only 6,800 points because 1,000 points is already covered. So this is one thing which I just wanted to tell. So when you have your position size under control, there is no need to have any fear about huge gap up, huge gap down. Everything will be covered quite well. So just see how much you're paying in terms of insurance. So 7,000 points is definitely not worth paying insurance in a particular year. Vishnu sir, thank you so much for your comments. So it really means a lot. So I hope that the this thing regarding why we prefer going naked was clear. So why we usually prefer naked positions and how we like. I also wanted to convey this, that going naked does not have, like, this concept of unlimited risk is not going to be there if you control your position size. So this concept is only going to come of this unlimited risk when you don't control your position sizing. So one more thing what I wanted to establish here is that sometimes you might end up giving more as a hedging cost than what you actually end up losing in the black swan event. So this is what we actually saw. I don't think any time we have seen a gap down in Bank Nifty of 7,000 points. So we Bank Nifty might have fallen 10%, but we have never seen a 7,000 point gap down, right? But irrespective of whether Bank Nifty gap comes down or not, we'll be paying a hedging cost of around 7,000 rupees. So that is something which you will have to keep in mind. Yes, this stream will be available even, this video will be available even after the stream ends. You can check it out in our channel. So I will be doing a full video on multi-strike OI pretty soon. So definitely that will be in our list, and we'll definitely end up doing that. So on top of that, we had a this thing question here by Balaji sir, who asked regarding the premiums. So even I would want to establish one thing here, because today is Wednesday and tomorrow is expiry day. So let's just go here, do a short straddle. So it's pricing in close to around 400 points, 450 points. So I will go 500 points away, 37,700, and I will go 500 points from here, which is another 40 rupees. So totally I have paid 100 rupees. So 100 rupees per week I'll be paying as a hedging cost. So it is pricing in only 430 points, but I am hedging it with 500 points away. And while I am doing that, you can see that I am like paying close to around 100 rupees just for the hedging cost. And now again, 100 into 52 is 5,200 points. And I don't really recall bank nifty falling 5,200 points gap down even during COVID. So like, get any black swan event in the past. So bank nifty has never fallen 5,200 points gap down. So bank nifty might have touched 5,200 points after it opened, but it has never fallen 5,200 point gap down. So this is the amount you will be actually saving in the hedging cost. So now even if you do 5,200 into 25, so 1,30,000. So to do one lot, you need 1 lakh rupees, and you will be saving almost the same amount just by avoiding the hedge. But one thing you have to keep in mind is to make sure that you have the right position size. So when you don't have that, that's when you fall into all sorts of trouble. So the coupon code is given down in the description, so you can definitely check it out and use it and get your courses for free. So Target right now does not have the trailing stop loss feature. So towards the end, I will just try to show you live execution of how everything takes place, and maybe we might take a short break now, and I'll be catching you soon around 12:30. So I'll just take a short break. So then we'll just discuss little more upon how exactly to build systems and how to automate it. I will also show you live execution, and meanwhile. Like to use Target, you will need to open a Firstock account. So right now we have only tied up with Firstock. So if you don't have a Firstock account, you can also use the link in the description to open an account and get your 100 orders free. So I'll be catching you all again around 12:30. So I'll just take a short break for a while, and I'll be coming back around 12:30. So there are a couple of things which I would want to tell before I leave. So in case if anybody has a doubt in the live chat section, and if anybody in the community present can help them out, that would be great, because we want to learn and grow as a community. And I'm pretty sure people out there in the chat section have much more experience than me and much better traders than me also. So anybody who is asking any doubts, definitely people in the comment section can people who are watching the video can help them out with your experience, with your knowledge, because end of the day, the idea of either doing a live trade or doing any YouTube video is definitely just to spread awareness about the markets and share whatever knowledge we have. And even I would also want to learn your perspectives and how exactly you think. So maybe I might not be doing live for the next half an hour, but I would definitely keep following the comment section. And one more thing is with regards to, there was some question is how it was regarding how much per lot or per order. So per lot 20 rupees, the same standard brokerage this thing what we have in the industry. So it's 20 rupee per order, and there's no fee for delivery based trading. Hi guys, welcome back to the video. So I hope I am audible. Can anybody confirm that? Cool. So meanwhile, you guys can also share what trades you have taken and how is it going. So as you can see, we haven't done much from the morning, so we are right where we are. But the MTM is slowly going up because of the theta decay. So morning when we started, we had around 2,70,000, and right now we have come almost around 3,40,000, close to around 75,000 by not doing anything much and just having a nice theta decay on our side. So right now, as you can see, uh, all the positions are doing quite fine. So I don't think there is any need to do any sort of adjustments or anything of that sort. So maybe around 1 o'clock, we might get one more nice chance to end up entering one more short straddle. And if the market continues throughout the day consolidating, then we will be left with a pretty good profit towards the end. Maybe who knows, we might be coming close to around 4.5 lakh as well. So the thing is, usually we run algos through Target, but today there was a small server issue which was being faced, and that's the reason today we didn't automate the trades. Otherwise, we run the entire or like intraday systems through Target. So I'll be showing you the live execution once again. So meanwhile, I can just teach you how to build systems and how to uh, like what to look for while you're building systems. So this is something which we can cover as of now. So I will also maybe put a link to StockMock. We use StockMock particularly for back testing because we find that the data in StockMock is more accurate than other backtesting platforms. So we have tested many backtesting platforms. So there is AlgoTest, there is QuantMan. So quite a couple of them are there, but we find that the StockMock comes closest to real data. So that especially if you add 0.5% slippage, you will be very close to the real data. And we will also be sharing one more StockMark link. And if you just sign up for free, anyway, StockMark, you can do some back testing for free. So if you sign up using this link, you will be getting around 40 credits. So usually you get 20 credits whenever you sign up. But if you sign up with this link, you will be getting 40 credits free. So free backtesting credits, you will be getting 40. So I'll show you how exactly you can end up signing up, and you can also do backtesting. So you can use the link put out in the comment section. So you can just click on the same, and you can register for StockMark, and you'll be getting your first 20. You will be getting extra 20 credits free. So when you use this referral ID to sign up. So now I'll also be showing how exactly you can build systems and backtest it using this, and you can automate the same thing with Target. So Target is still in the beta version, so we have some bugs coming up which we are fixing it right away, and I'll also be showing you that. So I'll just show you with regards to the system now. Then we will be discussing about how you can automate. I'll show you both. So first, I'll just log into stock market. Yeah, I just ended up logging into basket directly. So once I have come to StockMark, so you can see right over here, we have the home page. And in case if you guys, okay, just I want to know as a this thing, like how many of you are already aware about StockMark and how many of you are actually using StockMark for the first time? Okay, so we have many first time users. So let me just show you what is StockMark, a very basic functionality of StockMark, how you can build simple strategies, and then I will also be showing how you can use Target. Target is our own platform by Optionables, and it is completely free to use, like our other products and services. So you can use Target to automate your trades completely with whatever result you find good on StockMark. So let me just show you building simple strategies. Like you might have heard many people talking about system trades, trade automation. So these terms are very often for you to actually hear, because many people will be talking this on Twitter and everything, right? So StockMark is actually a back testing tool. It helps you back test the strategies, like simple system based strategies like doing a straddle and keeping a stop loss and so on. It helps you backtest simple system based strategies and see what were the results. So now I will just show you one very simple strategy, such as uh, like we'll just end up doing a ATM call sell, ATM put sell, and we'll place a stop loss of 30%. So this is a very simple strategy, and we'll be executing this every day at say around 1 o'clock, and we'll be exiting at 3 o'clock or 3:29. So we'll just run this very simple strategy, and we'll move stop loss to cost. And okay, or let's just keep it a very plain vanilla, so there is no additions or subtraction. Very much simple. So all you're doing is at 1 o'clock, you're going to enter one ATM sell leg of put, one ATM sell leg of call, and place a 30% stop loss. So is this clear? What exactly are we doing? Every day, 1 o'clock, with irrespective of it's a Monday, Tuesday, or a Wednesday, every day we are going at 1 o'clock, placing a stop loss of 30%, selling one ATM call leg, one ATM put leg. So once that is clear, I would continue. So just let me know in the comment section if this is clear. And also, I would also request you to share this video live stream happening, what is happening right now, to other friends of yours as well, so that even they can join in and see how you can end up automating your trades. So from next time, you don't have to actually sit in front of your screen and trade, because entire automation will be taken care of. So this is a very simple strategy. All I'm going to do is now click on backtest. So let us see how this strategy would have worked from 2017. So from 2017, I will end up running the strategy, and let's see how this strategy would have worked. So while the backtesting takes place, let me just take a look at the position, and like everything looks good as of now. So now the backtesting is done, and what Stockmark does is it includes a slippage of 0.5% by default. So it would have also accounted for the slippages you will face while you execute the strategy. So now you can see this very simple strategy. So all we did here is sell a ATM call leg, sell a ATM put leg at 1 o'clock every day. So irrespective of whether it's a Monday, Tuesday, or Wednesday, and place a simple 30% stop loss. And this is a plain vanilla strategy. There is no complications of choosing close to premium or re-entry or move stop loss to cost weight and trade. So even though there are many features, right? So there is no complications. So stock market has many features, but we are right now running the most basic feature. And you see, doing this strategy will actually would have given you a profit of close to around 4,46,000. So I know this sounds amazing, but it's actually true. A simple strategy like just doing a short strategy at 1 o'clock, placing a 30% stop loss will actually end up giving you around 4 lakh, right? So you can also see remaining strategies, something like the statistics of the strategy, like you have 67% probability of making a profit, 33% of the times you lose. You have a risk to reward of close to 1:1. So you can see you have 1,100 rupees when you make a profit. On an average, when you make a profit, you make 1,000 rupees. On an average, when you lose, so in this 33% of days, that is whenever you end up losing or whenever you end up making a loss, on an average you make a loss of 1,300 rupees. And it also gives you the total drawdown. So maximum drawdown period for this was just around 9 days, and you have the total winning streak of around 17 days, losing streak of 5 days, and expectancy of 0.25. And you can also see how many days no stop loss was triggered, one stop loss was triggered, and both stop losses were triggered. So it gives you a complete idea, or it gives you a complete this thing statistics of this strategy, which you can use and you can improve upon the same thing. So this is one very simple strategy. You can improve upon the same thing by maybe moving stop loss to cost, or adding weight to wait and trade, or adding re-execute. So multiple things can be done to improve your strategy. So you can just use the link which we have pinned out there. So just you can click on the registration link and register for Stockmark, and you'll be getting additional 20 credits for backtesting. So you can definitely try it out. If you like it, you can later on go and purchase some more credits for yourself to backtest. So one thing, what I would say, so okay, up to what extent does it match? So the thing is, they try to match it very close to the real data, because they add 0.5% slippage already with the strategy. So that's the reason the actual results what we get is very close to the backtesting results what you actually end up getting. So that is why, like, even though there are many other backtesting platforms out there, so we particularly stick on to Stockmark for the same reason. So one thing what you should focus on getting is to increase this expectancy. So the more you make the expectancy higher, go higher, you will be getting better results. So maybe instead of 0.25, if you can try to make it something like 0.4, 0.5, so that is really good for a single strategy. So this is something which you can definitely try out by just registering, and you can try out different combinations. You can try out placing like different orders at different time, different stop loss, or using these features. You can also try out in Nifty by combining Nifty Bank Nifty. So different things you can definitely end up trying out. And also, maybe when we do the live trade next time, you can also share what is the best expectancy results you were able to achieve. So how much was it, like whether you able to cross point 4, point 5? So that is something you can tell. So one more clue or one more hint which I would definitely give you if you're using for the first time is you can increase your performance by doing a basket. Just a second, guys. I will be back in just a second. So let's just continue with the same place where we left off. So I'll just take a call and I'll be back. Sorry for that, guys. So let me just continue with where we left off. I hope it is audible. So like I just got a call and I had to attend that. So once it's audible, so let's just continue with where we left off. Okay, that's great. So I was just suggesting something for people who are using stock mark for the first time, how to improve their performance. So for that, you can use something called as the basket. So basket, like you can see, there are multiple strategies created in this basket. So let me just show you one simple basket. Okay, to let me just try to show you a simple basket what we have here. Okay, this okay is 40%. Let me just create a simple basket to show you. So first, what we saw was we just did one single strategy at one single time, that is executing one simple short straddle with a stop loss at 1 o'clock. So now what I'll be doing is I'll be doing the same thing. I'll be selling a call leg, I'll be selling a put leg, I'll be placing a 30% stop loss itself. So what I will rather end up doing is I will place one at 920. So, so I'm just showing you this. So this is not any kind of recommendation. So the second one, I would end up placing something, say around at 11 o'clock. Everything is same 30% stop loss, nothing much we have done. So next 1 o'clock, the normal strategy, what we do, and maybe one more at yeah 2 o'clock. Let's just try it out. So this is something which even I am doing for the first time. So let's try it out and see what exactly the results suggest. So we'll do it from 2017. So the best part of system is you don't have to put in your emotion. Yeah, I'll just tell you about the expectancy of the strategy. So let's just look at this and see if the expectancy can actually reach zero point 0.5. So let's just give it a try. Even I have no idea what this is going to give, but I'm pretty sure when we combine multiple systems together, we are going to get very good result. So that is something which I'm pretty sure of. And meanwhile, if you are just finding this content useful, then do not forget to hit the like button and also share this video with your friends. So right now we have around 672 likes, so let's try to take it to around 700. So these strategies are now getting tested. So let's see what is the expectancy that we'll be able to achieve. One thing that you have to note with system is it is very simple to execute. So you don't have to break your head at all. There is no need to analyze any sort of trend. There is no need to open the charts. So all you have to do is just simply go and execute the trades. So we have run 4 strategies in total. So we don't know how it is going to work. So let's just take a look at it. So we have last one more strategy left to be back tested. So 3 are done. So we are waiting for the 4th one to get completed. So meanwhile, you can see that our M2M is slowly going up. Maybe around 1 o'clock, we'll enter one more strategy, one more short strategy. So we are done with all 4, and you can see just like that, we did the same thing. We didn't change anything. We did the very same thing. But what we did is we did for multiple time frames. So we did for 9 o'clock, 1 o'clock, 11 o'clock, and 2 o'clock. And just by doing or repeating multiple times, you see how your performance just ended up increasing. You didn't have to do anything else. All you have to do is multiple times you had to repeat the same strategy again and again, and you had a brilliant performance out there. So you can see the performance. Okay, I think we removed the old one. So let me just practice that again and show you the difference between the performance. So let me just test this and show you the difference between the performance. So I'm just trying to uh, like, I hope what I'm trying to tell is clear. So this is the initial strategy what we shared, and you can see this is the uh, updated strategy of doing the same thing multiple times. So you can see the performance of this is way superior compared to doing this individually. Why? The probability is 67%. Here the probability has increased to 69%, and your risk to reward here was lesser than 1, right? So you can see the risk to reward was lesser than 1. Here, your risk to reward has increased well over 1. And because of these improvements in the system, right, your expectancy has now increased to zero point 0.5. So now I'll just show you small tweaks to improve this performance of the system further. So one thing you have to note is the higher the expectancy, the better the system. So just focus on the expectancy. Now let's say I remove Monday, Wednesday, Friday from the days what we are using, or even Saturday. So it will take some time to recalculate as we have removed all the days. So we'll just have to give it some time because it has to recalculate for the entire 5 years. So after I remove the days, it has to recalculate for the entire 5 years. So you can see that if I remove all the days and just execute these strategies just on Wednesday and Thursday, my expectancy suddenly goes up to 0.66. My probability jumps to 72%, and my risk to reward is now around 1.5. So we have done very well with respect to risk to reward and probability, and my expectancy has jumped to 0.66. And you can see this curve right over here is much smoother and better than this. So here we had a lot of loss here and there, but this has performed much better and much smoother. So all we had to do is perform the same strategy on Wednesday and Thursday. So like this, you can try multiple combinations here, there, here, there. You can try multiple combinations and try to easily get strategies well over one. So we have a couple of strategies well over 1.1 and 1.2. So like I'm just giving you hints as to how you can explore, like in the sense how you can start approaching stock mark, how you can do different kinds of backtest. So you'll get data regarding every single day. So you can see what happened on Jan 4th, Wednesday. So you had total profit of this thing. Strategy one, which executed at 9 o'clock, gave you 600 rupees profit. This gave you 400, 300, 200. So all four strategies ended up giving you profit. So as we come down, so you can see on last Thursday, because we only execute this Wednesday and Thursday. Last Thursday we had 1,200 rupees profit. So we got 1,900 on the morning trade. Then we got 1,700 in the 11 o'clock trade. Then we lost 1,300 and 1,100. So this way you can go back and check for every single day, right? So we'll just take a look at the positions. So it's going heading towards 360. So maybe if we are ending around 4 lakh, it would be great today. So with futures, we would have lost around 2.5 lakh as we saw last time. And I don't think that have increased, like improved any further. So now we just saw with regards to the building of strategy. I'll also be showing how exactly you can end up automating them also. So me before that, I would just want to discuss some things regarding why system trades is better. So I'm not telling shift completely to system. I will also discuss upon how much trades you can do it in based of system and how much you can do discretionary, because we do both. We do both system and discretionary. So uh, maybe 5 more minutes, I'll just come back. Before which, I'll just right now enter a small trade manually. Then we'll just do a simple 38. Same, we'll just go with whatever we have here. So we'll just add on to the quantity 750, 750 more. So 38 300p, 38 400p. So just added some more quantity. Right over here. So I'll just place the stop loss at 250 for each. So I don't know what would be the right stop loss, but I believe 250 should be a good stop loss. So I'll just take a 5 minute break and I'll just come back and discuss more things with you regarding why system is good, what part of the capital should be kept for system, and also how you can automate the system completely. So I'll be discussing everything further. Okay. Hi guys. Sorry for that. So the thing is, before I continue with the system trade and how to automate that, there is one very important thing which I want you guys to note. So when you come to Optionables website, so first of all, I'm audible, right? So I just want to confirm that before we continue. Okay. So you can go to optionables.in and so recently, we have started, not recently, just today, we have started writing the blog section. So you can come to the market overview here. So when you come to market overview, you will be getting market overview for every day. So from today, we are actually writing this. So you will get a complete overview of our chart analysis. So like here, we have a person named Ayush. So he takes care of he's a very good directional trader. So since we do non-directional, so he does very good directional trading, and he writes these blogs and analysis. So I would definitely urge you to check this out. Just go to optionables.in, go to blogs. So we have started doing this today, and go to market overview, and you will have everyday report here. So by morning 9:15, it would be updated. So he will be giving you a complete analysis. So he's as I already mentioned, very good directional trader, and I'm pretty sure his insights will definitely be helpful. So one thing I would also want you to check or tell me is the review regarding the same. So just do check it out, read it once, and do drop a review regarding what you think about the market overview. So was it helpful? Is there any improvements that you need or anything extra you look for? So this is purely based on the technical perspective. So he would have given, I'm pretty sure that he would have given a very good analysis because he trades for optionables also. So you can definitely check it out. So now, with that, we'll now go back to where we left off. So we were with how to build systems, and we will also have to talk about automation. So before which, I'll just take a quick look at M2M. So M2M is doing quite fine. Maybe when we reach around 4 lakh, I will just start exiting the positions slightly, because we have done fairly well compared to where we were. So if you guys remember, when we started off the stream, we were around 2 lakh 80,000. Right now we have come to 3 lakh 70,000. So we have almost got around 1 lakh rupee just in terms of option DK. Right. So now coming back to this. So we were talking about systems. So let me just come over here, clear everything, and discuss more on why you can do system trading along with discretionary trading. So we usually do both system and discretionary. So I'll just show you that. So what happens with discretionary? So I'll mention both advantages of system trading, disadvantages of system trading, and I will also be putting more light upon like how much capital you should be deploying for what, right? So now, first advantage of this system trading is it is rule based. So let me just write advantages here. So it is rule based. That means you will have fixed entry irrespective of whether the VIX is high, VIX is low, whether VIX is over 30, under 30, or even whether today is a Monday, Tuesday, or a Wednesday. You have a fixed set of rules that you have to enter at this time, exit at this time, and this is going to be your stop loss. So that is one advantage, because you know what to trade. Because sometimes when you come discretionary, you open the charts, you look at the market, you will have no idea what to take, what positions to take, what view to take. So you'll be completely clueless. It happens most of the times, you'll be completely clueless. So such things can be definitely avoided when we are actually doing system trade, because we have a fixed idea of what exactly we will be taking, right? So this is first one. Then second one, we already know the results back tested. So most likely we can expect the same kind of results to continue. I'm not telling always we will have the same results. I'm telling most of the times we can expect the same results to continue. So if I know that the probability of profit is 70%, if I know my risk to reward is 1, so 1 is to 1, so most likely this is going to continue, and I can trust the system because it has been back tested for 5 years. So we know properly what, like, we have tested everything properly, we have seen, we have liked it, and we have applied the system, so we will know what the results are most likely going to be, right? And third one, so it is very easy to execute. So you don't have to sit and do any kind of analysis, so it is very easy to execute. There are fixed set of rules, you can just come and do it. And fourth one, you can automate. Like, the thing is, since it is rule based, so you know that okay, after this time I have to enter, this is the stop loss. Since everything is fixed, you can quite easily automate the trade, and you don't even have to worry about going in front of the screen and manually trying to execute this, right? So these are four advantages what we have with system trade. So now I'll talk about some disadvantages with system trade. So these are not disadvantages. So these are more like advantages of discretionary trade rather than disadvantages of system trade. So the first one, the most important one, is the extra alpha, right? So when you're doing discretionary, so for example, last week and all, we were quite clear with the trend, so we knew that the market was heading upside and market was in an uptrend, so we were sort of quite clear with the trend. And once when we are clear with the trend, we can easily take a directional view. So let me just see the markets where exactly it is. So it's trading around 350. Let's see if any kind of adjustments are required. I don't think so. So meanwhile, I'll just exit this additional put option what we have here. So just to be on the safer side, I'll just come out of this. So right now we just have 38 500 short straddle, then we have some short strangles and some more short strangles over here. So let's see where market can take us to. The only issue is with regards to the European markets. If they open lower, so then yeah, if they open lower, then the issue is we are most likely to go lower. So I'll just look at what exactly is happening to the European markets. So DAX is flat. Almost all the markets are flat, but we will have to see how exactly it is going to continue from here, right? So hopefully we would expect the markets to head higher. So we will leave this part as it is, and we'll just come back to this thing. So the disadvantage is the alpha. So when you know the trend, you can definitely end up achieving more. So market was going higher, so you could have easily ended up creating bull call spreads, and you could have made much more than what you would have otherwise made with simple system trades. And the second advantage or disadvantage is sometimes one stop loss gets triggered, right? And you know that the market is bullish. So right now the market is bullish. Whenever market falls down, market is usually bouncing back up, right? So in such scenarios, whenever P stop loss is triggered, you can, if you're doing discretionary, you will end up taking some bullish positions, or might also end up shorting some additional put legs. Biggest problem. So sometimes even when you're sure of the trend, you can't end up adjusting the particular thing, right? So because of the same issue, so let me just see what happened to the internet. Okay, again the feeds have started. I hope the stream is continuing. So something happened to the internet. It's, yeah, so let me just I'll just put the filters back again. So you can see with futures, we just have 40,000 rupees profit because we have a 3 lakh loss from futures. So, yeah, right. Like with options alone, we have around 3 lakh 50,000 rupees. Right. We just left off here. So this additional view which you add to the market is actually going to make the difference in the performance. So it is going to help you increase your performance slightly because you are also adding your view to the market right over here. So these two are main disadvantage. So then what should you use? I would say use both. There is no need to give up one to use the other. Do both discretionary and do both system based. So these two will act as a hedge for themselves. Let's say when discretionary is doing well, system might end up doing well, or system might not do that well. But when discretionary is doing bad, system might end up doing very well. So that is definitely a possibility what we have. So that's the reason I would suggest you to have both with you. So both the system and discretionary. So now the question comes to uh, what kind of so now the question is just about what kind of capital you should allocate to discretionary and system based. So I hope before we continue, what we have spoken or discussed here is clear. So we'll just continue with the stream. So alpha is nothing but you doing better than the benchmark. So the difference is called as alpha. Let's say your system is helping you achieve around 20-25% a year. So if you can do 30% to discretionary trading, so then this 5% is called as the alpha. So once this is clear, we will just continue. So let me know in the live chat if you guys have any doubt. So we'll first clear that, and then you can also let me know if anything has to be cleared with respect to this. And have you understood how to backtest the strategy, and what are the advantages and disadvantages of system-based strategy? Okay, so now since that is clear, we will go ahead with discussing how much capital to use, and then I'll also show you one automation. So they were still working on the server end, so I think it should be fixed by now. Let's just give it a try, right? First thing, what you should note is you should first understand or ask yourself what kind of capital are you comfortable with trading. So let me just give you example over here. Let's say I'm trading with a capital of right now around 5.5 crores, right? So this 5.5 crores, I'm comfortable taking the trades, right? So let's say I am achieving 30% with this 5.5 crores. So tomorrow, let's say my capital increases to 15 crores and my performance drops to 20%, right? So if my overall performance drops to say 20% from 30%, so right now we have around 5 crores. If the capital increases to 15 crores, let's say my average performance is dropping to 20%. So that means on this remaining 10 crores, I have performed really badly, right? So remaining the additional 10 crores, I have achieved a performance of just close to around, I would say, let us just see. So to achieve 20% on 15 crores, on 10 crores, I should be doing somewhere around. So let's just do a simple calculation here. So on the remaining 10 crores, I would have achieved a total return of 15%. So you can see what exactly is happening here. Okay, so for people who are not able to understand the this concept, so let's say today I am managing 5 crores. Okay, so I'll just mark these two. So today I am managing 5 crores, and let's say I'm achieving a performance of 30%. So I am able to hit 30% because I'm managing 5 crores. So tomorrow my capital comes to 15 crores, right? So 30% on 5 crores is 1.5 crores. So I'm making a profit of 1.5 crores on this 5 crores. Let's say tomorrow my capital jumps to 15 crores and I end up doing 20%, which means I end up getting a return of 3 crores. So you can see what exactly has happened here, that my even though my absolute return has increased, in terms of percentage it has come down. So how much has it come down? On this remaining capital whatever I have just achieved around 15% return. On the first 5 crore capital I have achieved around 30% return. On the remaining 10 crore capital I have just achieved around 15% return, and that's the reason on the total 15 crore capital, I have achieved a net return of 20%. I hope this is clear. So, okay, once this is clear, so now you can see that as my capital starts to increase, right? So my performance is slowly coming down because I am not able to handle that level of capital that well by doing everything discretionary. Because whenever you do discretionary, there'll be a lot of emotions involved. So big game term swings will be there, and you will have to take a view always. So it is going to become harder and harder because we are doing discretionary. So this 10 crore, let's say on the other hand, I have a system. So this system is giving me 24% per annum. So this is going to give me fixed 24% per annum. So right now, I'm able to generate with my 5 crores 30%. But the problem is on this additional 10 crore capital, right? So on this additional 10 crore capital, I am generating only 15%. Instead of generating 15% on this 10 crore, I rather put it the system where it gives me 24%, because when it comes to system, there is no emotional swings. There is nothing to really worry about. Everything is going to take care by its own, by itself. So there is nothing much for me to worry about. So I am better off putting this in the system rather than trying to uh, trade discretionary. So even in this 5 crores, it might be something like for the first 1 crore, I might achieve a performance of 50. For second 1 crore, I might achieve a performance of 30. For the third 1 crore, I might be doing 20. So the thing is, even here, so my peak performance might be when I'm just trading with 2 crores. So overall, let's say I'm achieving 30%, but my peak performance can only, let's say, was when I'm trading with a capital of 2 crores. So this additional 3 crore of capital what I have is actually generating me lesser than 24%. I hope you're getting the concept of what actually we are trying to do here. So I'm just trying to break my capital into smaller chunks and see at what level of capital I can achieve my peak performance, right? So what happens is you can try this yourself. Whenever you increase your capital, you won't be able to increase your position size by the same amount. Let's say you're going with 2 lakh, so you increase it to 20 lakh, and I will take a bet you want to increase your position size by 10 times. So you will maybe just increase it 4 times, 5 times, and this is bound to happen for sure as you start trading big, because after one point you would be more focused on the percentage return rather than your M to M. You don't want huge M to M swings, so you would be happy with your percentage return, right? So that's the reason. Break up your capital into smaller chunks. So see at what level of capital you can do or achieve your peak performance with discretionary trades. So remaining, if the remaining capital is achieving a performance lesser than your system, let's say system is achieving 30%, so 24% was just an example. Let's say system is achieving 30%. So if you are able to do much better than that, so then you have to automate, or you can put everything into system and start trying it out. So I hope this is clear. If this is clear, I'll just now go into the last section of how you can automate everything for free. So how you can use your system trade, and since we already learned how to backtest, so I'll just while the market is falling and still we have our M2M intact. So let me just book some short straddles here. So I'll just end up booking this. So right now we haven't taken much hit on our MTM, but if the market starts falling, definitely we'll end up taking a hit. So I'll just book this, and we might hit a stop loss for the other two right over here. So let's just see how exactly the market goes from here. So I won't be touching anything else. So in case if we fall and if our MTM ends around say 250, 270, I might rather take out those profits and sit for today. So I won't be doing much apart from this. So right now we have just come out of our short straddles at 38,500. So right, good position I would say. In spite of market moving against us, we haven't lost much on MTM. Just around 30,000 loss is what we have got. So from here, where the market goes is up to market. But one thing what we can do is definitely do a shift for this particular position from 38,600 towards 38,500 call option. So I'll just do that quick shift of 600 quantity, and I think with this we are now good to go. So let's see where the market turns negative. So it's just headed down, and even our M2M falls. So as you can see, most of our stop losses have triggered, and now we only have the call leg, which we are sitting naked. So let's just take a look at the chart once before I show you how you can automate the whole thing. So most likely we might find a support near 200. I am not sure, but I don't want to risk it. So most likely it might happen that we might find a support and bounce back from there, and that would make things much worse for us. Given that we only have call legs now, all our put legs have triggered the stop loss. It would make things much worse for us. So the moment we cross 250, I will just book the profits for today, whatever we have got, and I will close that, and I will just show you regarding. So let me just close the trades for today, because I do personally feel that we might find support here and start moving higher. Even if I am wrong, it's fine, but it is important to protect whatever profits that we have made. So it has triggered all our stop losses on the downside. So it is not worth holding only the call legs, because multiple times we have seen that during the last hour, especially, there will be huge amount of buying which will come in from the FIIs who will be pushing the markets higher. So this is one move which we are getting to see quite often nowadays. So not bad. We have done a good job by booking around 2.7 lakh. So this is right where we started in the morning. So we had gone to 3.7 lakh, but unfortunately back again, we have come to 2.7 lakh. So from here, markets can go anywhere. So it can either go down or up. So that is something which shouldn't bother us, because right now we are out of all the positions. So now, since we are now done with that, I am just going to go and show you how you can automate your trades. So before which, I would ask for people who are joining into live stream now, or who are actually into live stream from quite some time, make sure that you are watching the stream live. So it might happen such that like your stream might be 2 or 3 minutes behind. So all you have to do is just click on the, it will be, the YouTube will be showing how behind are you in the stream. So whether you are 2 minutes behind, 3 minutes behind, YouTube is going to show you that. So you can accordingly adjust and start watching the stream. So this move was quite unfortunate, I suppose, because we had kept a stop loss around 270. It triggered and it has come back. So now I will just be showing you how you can end up automating your trades. So what is, so like right now morning we were having some server issues. It should have been fixed by now. So you can just log into target.optionables.in. Right now we are in a beta testing phase. So there will be some bugs which will be coming up here and there. You won't be able to register today because registration is closed for early access. So people whoever had registered earlier, so only they will be able to use it. So right now we have closed for early access, but we'll be opening that quite soon. To use Target, all you need is a Firstock account, which you can use. You open using the link in the description, and you can get your 100 orders free. So I'll be showing how exactly you can end up automating your trades. I'll go to Optionables account now. I will log in from Firstock. So this is TO0001, as you can see. Let me just stop this. So you can see the account ID is TO0001. That is the same account ID what we are using here. I'll show how exactly the orders can be automated. Now, let's say I put a order that I need to sell Bank Nifty ATM call 20 lots, and this platform is totally free to use. So you can come create an account, start using it completely for free. You don't have to pay any charges, and I will shoot 30 lots. And meanwhile, I'll just cancel the stop losses. That is one thing which I have to do. So all the stop losses are also cancelled, and I'll be shooting 30 lots, and I'll be placing a stop loss of 30% at 1:35 p.m. So let it square off at 320. I will name the strategy test one. There might be some issues because morning we were facing a lot of server issues, but everything seems to be fixed now. So I'll just click on run algo. Right now, the strategies are automated. So at exactly 1:35. So 1:35 is what we have kept the start time as. At 1:35, we should have the orders coming up right over here. We have another 1 more minute left. It might or it might not, because there was some server issue in the morning. So that's the reason we couldn't automate our trade today. But it seems to be fixed now. So let's just give it a try and see. And you can just log into target.optionables.in. And right now, early access is closed. We had the early access open up until yesterday. We have closed the early access and we'll be launching the actual software pretty soon. As expected, the market is bouncing back, and this will automatically end up taking a short straddle at 1:35, and it will automatically place the 30% stop loss also. So the estimated margin, we have taken the input. We'll definitely be doing that very soon. Before maybe end of September or mid of September, we'll have the estimated margins also there on the platform. You can see exactly at 135. So this is 1335. Exactly at 135, the algo triggered the orders and also ended up placing a 30% stop loss. And we didn't do anything manually, everything was automated. And all we had to do was just set the algo and it would take care of everything manually. So now I'll just show how you can also execute multiple orders. I'll just stop the algo. The moment you stop the algo, uh, it will clear everything for you. So once the algo is stopped, so we will end up shooting the orders again. There will be some issues in the backend, so it should technically clear all the stop losses and place the orders. So we'll run, this is test one strategy. We'll run it at 40, and we will run the test 2 strategy. We'll create one more test 2. So we'll sell ATM call, sell ATM put, place a stop loss of 30%, and run this at 145. You can backtest your strategies on stock see what suits you, and accordingly, you can just end up automating the whole thing. Again, we have started running the algo at 140 sharp. We need to have two orders, and at 145, we need to have two more orders of 30 lots each, and everything will be taken care of by the algo automatically. As I told you, morning there were some issues with the server because we were moving everything from the test server towards the production server, the main server. While we were doing that, we faced some issues, and the team is continuously working on fixing those issues. And right now, we have closed for early access, and it should be available maybe in next the coming week. So we have planned to launch this on 15th of August. If that is not, in case if the systems are not completely ready by then, we'll be launching it by 30th of August. We will be still introducing this entering based on premium, and also the closest to premium wait and trade. All these features will be introduced very soon. In the right next update, we'll be introducing everything. And this you will be able to do simple backtesting. You can do simple backtesting using stockmark. You can check it out, and after that you can, if you just have a first stock account, you can just put some margins over there and automate the entire trade. The software will be free, whether you do early registration or late registration. So the software is definitely going to be free for your lifetime. But the thing is, why we have restricted for early registration is because today we got a server issue. So we don't want people who are signing up new to have or face the same issue. That's the reason temporarily we have suspended the early access, but we'll be making it full time available very soon, and the software will still remain to be free to use. The servers are in AWS. Maybe I will just leave it for the algo itself to run and close the remaining trades. And I think discretionary part, I won't be doing anything much because today we have got some good profits. I think it's wise to protect that rather than try and take new trades and try to mess up the current position. As you can see, again, the two orders are triggered exactly at 140, and the stop losses are also properly placed at 30%. And one more order will get triggered at 145, and again, the stop losses will be placed exactly at 30%. Actually, I don't trade currency much, so I don't have an idea with regards to where exactly USD INR is running and what is the view. So I won't be able to comment much on that because I personally don't trade USD INR. And also, if you're watching the session for the first time, and if you have liked the content on the session, then do not forget to just hit the like button. So right now we have around 750 likes. So let's try to reach it to 800. After 145, we'll be taking a break. So we'll leave everything to the algo. We won't be taking much of discretionary trades. Then we'll maybe towards the end up taking some positional trades. So this is a platform. This target is a platform by Optionables itself. So that's the reason it's completely free to use. So all you need is a Firstock account to start using. So I'll just pin that. You can definitely go and check it out. I think intraday we have a loss, guys. I'm not very sure. It does appear that we have a loss, at least looking by here, because we had 38, 300, 400, and 600. All these are intraday trades itself, and 38, 200 also. Yeah, it does appear that we have a loss in intraday, and around 20, 30,000 loss is what we have in intraday. Yeah, the registrations are closed as of now. As I already told you, early access registrations are closed. So we are going to launch this app full time itself. You can definitely start using it. In early access, we have only given it to the beta testers. Whoever is testing right now are the beta testers. There will be small bugs here and there which they are reporting, and we are continuously fixing these bugs. Mentorship online, we had some offline mentorships conducted last time. We will do that. So right now, our focus is more towards on upping the target site. Once that is done, we will be definitely focusing on doing some mentorships offline. Zerodha we can definitely tie up, but if we tie up with Zerodha, we can't make it free because the APIs of Zerodha are itself paid. So we won't be able to make it for free because Firstock gives the APIs for free, so we are able to automate for free. The time is 1:45, I will just check the order book. You can see at 145. Oh, we have just placed one lot. I think we should have just placed. I didn't realize this. We should have placed 30 lots. Unfortunately, we have just placed one lot here. So overall, yeah, like I will just yeah, now I won't be able to change it because the execution has happened. But yeah, but at least we can see that it has been executed exactly at 145. The execution has taken place, and we are running now. We'll leave it as it is. Yeah, first stock closes intraday position at 325, so somewhere around 326. That's when they close the intraday position. Mentorship opportunities, we will tell you definitely when we start again. Online, we don't plan to do because we feel that online, till we actually stay with you guys and do live trading, it is not going to be worth it. It's just teaching something online. So we would prefer doing it offline, and we would prefer doing it in the sense, at least it should be for 5 to 7 days to understand what is happening. So 1 day, 2 day workshops or mentorships is not going to help much. Money use that was used today. Let me just check. I want to know how much would be exactly used for this particular trade. Overall, we have used 2.95 crores, but some of them is blocked for futures also. So you can see all these futures would have taken up some margin here. So we don't know how much exactly for Nifty, Bank Nifty. Sorry, how much exactly for these trades and how much exactly for futures is something which we don't have the breakup. Yes, you can pledge. You can pledge, and you can definitely take margin benefit. Right now, the 50-50 rule has come to all the brokers. So before it was not the case. Before you used to get 100% collateral from Firstock, but right now you are only going to receive 50% collateral. Yeah, this is a live upload on the channel. You can definitely view the recording later date as well. You're not going to get first 100 stocks free. You're only going to get the first 100 orders free. So that means you are going to get brokerage worth 2000 rupees free. So when you click on stop algo, the position should exit automatically. But as I told you, we were doing some server changes. There we have faced some API issues which they are fixing. We were pushing it to the main server from the test server. So while we were doing that, there were some issues which we faced, and they are fixing it. So it will exit everything automatically, cancel all the stop loss orders also. We didn't like none of us here actually belong to a rich family. I think we also have put up a video on how we started trading and how we came up. So it's because we were able to achieve consistent performance on lower capital. People were actually happy to give us more capital to trade, and that's how we started building and slowly scaling up. So this is the terminal which Firstock provides. So this is built by the Nest team itself. Like as you know, Nest is currently shut down. So Nest is not giving the terminal to anybody, and like anybody new. And this Nest team, this is the terminal which is built by the Nest team itself. And one more thing, what I would suggest you guys to do is not transfer everything from your existing account to Firstock. just put 1 lakh first. So even though you need an account with Firstock to trade, I would suggest just put 1.5 lakh first. Try it out. Only if you like it, then shift. So there is you don't do the mistake of shifting from which broker you're comfortable to a new broker. Put very little money. That's how even we started using Firstock. First, we put very little money from our old broker, then got used to it, then slowly started putting more money. And even if you want to do automation, first put small sum, try automating it first, and then only if you like it, you can start putting more funds and you can do the full automation. So the entire thing here is not our capital. So we have a partnership firm, and the partners of the firm actually this is done in the partnership account. You can see that Optionables FinTech LLP. Huh. So which is our like so my Sujit and the partners funds. So everything put together. And one more thing, what I would suggest is that in case if you guys are actually profitable, then I think you should go with brokers who give you better services. Or if the service is good with other broker, it is fine. Huh? Hmm. 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 So the thing is, in case if you're not liking a service of any particular broker, if the service is not good, so then I think if you're profitable, then paying 20 rupees shouldn't make much of a difference. So only if you are not making profit, only then it will hurt you a lot. So I feel that it's okay to pay 20 rupees as long as the broker provides good service. One thing what we should definitely note is that when the companies are funded, right? So because like I am working in this industry itself day in day out, so one thing which I can tell you from my experience is when the companies are funded, they will have upfront money to invest in the tech. So after that, if the companies do not generate revenue, if they are giving everything for free and they do not generate revenue, they won't be able to upgrade with the technology. Let's say tomorrow a new technology comes, so if they have to bring it to you and give it to you, they will need more money. So every time they can't depend on funding for new money. And if the broker is charging you, whether be it zero the upstocks, let it be any broker, so zero that is totally worth paying them 20 rupees. Even like first talk also, we feel it's totally worth paying them 20 rupees because for the service they provide, for the technology they provide, for the experience they provide, it is totally worth it. Only if the broker is able to earn some money, he will be able to give it back to you in terms of good technology. You can't open LLP for trading directly, but you can make investing as one of the objectives of your company, not the primary objective, but one of the objectives of your company. Right now, since I have left everything to the system, I won't be interfering now. So maybe I'll just come towards, like, I'll just take a small lunch break and I'll be back. So let's see what ends up happening. Then we'll take some view for tomorrow and end up taking some simple positional trades. So we'll also see what exactly we can end up taking there. So meanwhile, you can also let me know in the comment section, like, how is your trades going? What view you have on the market? How is everything else? So if you're going one lot naked, so then I would suggest you to that to overnight. I would suggest you to have anywhere between 5 lakh. So 5 lakh is a good amount to start if you're going one lot naked. So even to be on the safer side, you can also go with something like 7.5 lakh. So that is more safer and very conservative. If you are a very conservative trader, then go with 10 lakh per lot. So that is on a very, very conservative note. 50/50 rule as of now doesn't apply to intraday, in Firstock at least. So right now they're not charging for intraday. It's only for positional what they will be charging the 50/50 rule. So uh, yeah, if you're carrying the positions overnight, then you will be charged. And but the thing is, again, more clarification is, as we were speaking to the brokers, one thing what we got is that more clarification is required from the SEBI and NS exchange side as to when exactly this thing has to be done. So right now they aren't charging for intraday, but positional, yes. Okay, so we have Vishnu sir suggesting a simple short straddle strategy with 20% stop loss. So people can definitely try it out if you're interested. So you can also automate it. So, but I would first ask you to backtest, see if the risk is okay for you, and then only do it. Yeah, like as Ajay Gandhi sir is suggesting, even that will be a very good possibility of just creating a reverse ratio spread in case if something starts to go down. So, and you can also buy a hedge of current week if you're doing uh, late week or late expiry straddles. You can ratios. You can also buy the current week one. And also, guys, do not forget to check out Optionables blog, where we'll be giving out daily market view. We have started it from today. Do let us know your opinion on the same, where you want us to improve. So that is something which we'll definitely be doing. Even we don't know how exactly it will come out. So you can definitely check this out. So you can just go to optionables.in, uh, go to blog. So I'll just put that out here as well. So here under blog section, you can go to market overview, and in market overview, you can check this out. So this is yesterday we have started writing the blog. I mean today morning, 10th is today. So like one from our team named Ayush. So he is a directional trader. So he writes the market overview every day. So it is observed, at least from our experience, that the earlier you do straddle, you would have got much better profits than you start doing it later. So, like generally, the performance has been good when you do it early in the morning trade itself, early trade itself. So that is something which we have gotten to observe. So we should have gone with 300 quantity, sorry, 750 quantity. Unfortunately, we have only shot 25 from the system. So maybe we might just end with 3 lakh. We don't know where, how exactly we are going to end. So let's wait and watch. So I won't be interfering with the system now. So whatever system gives towards the end, we'll just be taking that. And now I'll just be closing down, like not closing down, I'll just be taking a break for around 20-30 minutes while I have my lunch, and I'll be back soon. So later we'll discuss on how exactly the system performance has gone and what we can do with it. And in case if you have liked the content, then do not forget to hit the like button, share this video, and also you can also hit the subscribe button and click on the bell icon to get regular notifications. And on top of this, you can also visit target.optionables.in. So this is a new platform by our team itself. So you can check that out also. Right now we have closed down the registrations because we are right now working on early access, but we'll be opening or launching the full software access very soon. A point 0.5 expectancy strategy is something which we have shared. We just discussed some time back, and luckily it just turned out to be having an expectancy of 0.5. Monthly expectation, I would say 2 to 3%. That is what you should aim for. Anything more than that, you would be taking extra risk to achieve extra returns. So I'll just take a short break for lunch, and I'll be back. Meanwhile, the system is going to take care of the remaining entries. Thank you. Hey guys, welcome back to the stream. So it's quite unfortunate for us that all side the stop loss just hit and came back to the same level. First of all, I hope this is audible. So I hope you guys are able to hear. So yeah, like we were doing quite well, and I think the position, if we had just held on to the same position and if it hadn't hit the stop loss, the intraday trades as well as the positional trade, I think that would have done quite well. So today, holding on to the trade, we actually ended up losing than actually making money. So it was quite a easy day, to be honest, but the in between volatility hit our stop loss, and we will be ending the whole trade today overall with a loss. But if not for that, it's going quite good in the sense, overall we were able to do somewhere around 2.5 lakh with positional. Intraday we couldn't make much, and even sadder part is this particular trade right over here. This we just entered 25 quantity, one lot through algo. We were supposed to enter 750, and the like trade where the stop loss was hit, there we entered 750 quantity. So this got triggered at 306. So right now it's trading at 260. So we ended up losing around 50 points on, yeah, we around 50 points on 750 quantity, which is around 30,000 and odd. So we'll just hold it till 320, and we'll just come out of all the trades. Meanwhile, I will end up taking a positional trade for tomorrow. So the positional trade, what I'll be taking is a 38,300 short straddle, because today we have seen that the market is taking support at the lower end, and also as it tries to move higher, it is facing some kind of a resistance. So I am not recommending this trade for, like, I would suggest that you consult your financial advisor before you actually follow this or anything of that sort, because this is not any kind of a recommendation. This is only for the educational purpose. So I'll be going 1,500 quantity over here. So 1,800 quantity would. Okay, I'll just be going with 1,500 quantity here. So 1,300 B this is. So I'll just shoot this, and 1,500. So 1,500 quantity of short straddle is what we have done. So then remaining intraday trades will be exited at 320. So these two are positional trades which we are carrying for tomorrow. So I would want to point them out again. 1,500 quantity of each. So let me just put this on Sensibull and show how exactly it is going to look. So these are the trades which we are carrying for tomorrow. And 1,500 quantity would mean we are carrying somewhere close to 60 lots. And you can see tomorrow, in case if we are seeing any kind of a flat opening. So let's just take this to Thursday. So I'll just go to 9:30 p.m. So tomorrow, if there's any kind of flat opening or even a 100 point, 200 point upside, so even if there's a 200 point upside from here, we should be expecting a profit of close to 2.3 lakh at the opening itself. So this is one trade I'm comfortable holding, and we will also talk about the risk factors here. So I personally do here, or I personally do feel that whenever we carry overnight positions, it says unlimited risk is there, but I expect not to have more than a 3% gap up or a gap down. So we will be factoring in what is the worst case we'll be losing for a 3% gap down. So even if there's a 3% gap down, we will be losing a total of around 10 lakh rupees, which is less than 2% of the capital. So what we should note is when Nifty itself is falling 3%, when the index itself is falling 3%, and if you are losing less than 2% of the capital, then you have done a fairly good job. So just to show you, when I go to the back office reports here, So you see that the total account value is around 5.8 crores. So if we are losing 10 lakh also, it will be less than 3% of the capital. One thing what we are seeing right over here is the premiums being shot up quite a lot, because we entered both of them together, but we have just lost 10,000 just like that itself without the market moving anywhere. We have lost close to 10,000 because we are seeing that the premiums are gaining quite a lot. So this is one trade which we are comfortable holding. As we can see that uh, Sharavanan sir has mentioned it in the comment section. We have the US inflation data today. So no wonder the premiums are just going up. So we might not see any decay till the end. I'll just wait till 320 for the algos to exit the orders, or we'll just stop the algo now because there'll be no decay in the premium if there is a. So it really depends on for the question which Ajay Gandhi sir is asking. It really depends on what capital you have and what is the maximum risk that you will be carrying. So tomorrow, the thing is, there is always a risk of this because of this US Fed. Like I would personally feel that after the Fed event, the markets might go up. So this is my personal opinion. But like we don't know what might end up happening if the inflation data is very bad, because since it's almost always below the estimate for the last 3 4 months, so I somehow feel that okay, we might end up coming in line or slightly below and the markets might end up surging. So this is my personal opinion. So we can see the premiums just shooting up. We just lost 10K by doing nothing. So we entered both at the same time and we have just lost 10,000 rupees straight from that, right? So we can also end up holding slightly bullish position. Maybe I will just go with a simple along with tomorrow's expiry, I will go slightly bullish with Nifty, because I do believe that Bank Nifty has run up quite a lot. And even if we are in case correcting, it might be the banking sector which might fall more than the. Okay, we can see both the premiums here. So I shorted when both were around. I shorted when both were around 200. Now both have become 210. And you can see that we have lost 17,000 by doing nothing. So I'll just exit the other trades. It should get auto exited. So we are just losing out money here because there is no decay which is coming in. Monthly straddle with next week hedge buy, I don't think it's a great idea because of two things specifically. The first thing being that the monthly straddles do not see any theta decay, and second of all, you will have a huge decay with respect to the next week straddle. So for that reason, I don't. Sorry, next week hedges. So I don't think it's a great idea to go for that. And you can see we have lost 24,000 almost by doing nothing. And this trade was just entered now. So I think I'll just come out of the remaining trades. This trade I won't end up touching. So let it just expire as is. So these two trades I'm out. So these the premiums are just continuously increasing, and our MTM is slowly coming down. So morning we started with 2,70,000 in the opening. We went to 3,70,000. Now we might again fall back below 2 lakh also. So at a point we were at a profit of around 70,000. Now we have come to a loss of 70,000. So the reason I'm okay with holding this trade is mainly because of two. Even I somehow do expect the markets to head up higher. I might be totally wrong with this view, but that is what I feel. And in spite of that, I'm okay holding this because in case if they go up, we have a lot of future positions which will more than well compensate for the loss what we will be having due to the this thing option trade. So even if there's a 1% gap up, I wouldn't think, like let's say 300, 400 point gap up, I wouldn't think we'll be losing much. So let's say there's a 2% gap up. So then maybe we might end up losing 1.5%, which is close to 600 points. Then we might lose around 2 lakh rupees, which we are quite okay with taking. So just to play it on a safer side, we can also end up cutting down the quantity slightly, maybe to 1,200. So we'll be much on a safer side because this overall quarter has gone quite well. Let me just open the back office here. So when I come to reports and P&L report, so I'll just show from this quarter. So as you can see, this quarter we have a realized P&L of close to around 32 lakh plus unrealized of close to around 13 lakh. So overall put together, we have close to around 46 lakh of total P&L this quarter in the first 40 days. So we still have around 50 more days to go. So let's see how it goes. But tomorrow, depending on the Fed move, we can either see a big up move or also a big down move. Given that we have run up quite a lot, in case if the news is not so positive, then definitely we'll be expecting some kind of correction to come in. Or the other way around is in case if we have any positive news, the world market has not seen such a big run up, so that can trigger a big move in the world market. So I think with this we also sort of come to the close right over here. So I think we'll be closing the trade more or less on the similar note. One thing that would hurt us is in case if the US inflation data is not in line. So if there's a big fall, then that would hurt our future positions. So we have a strict stop loss on future the moment we are losing. So this month from futures we have made around 4 lakhs. So let me just add futures side by side. So you can see when I just take futures into consideration, we have made 4,63,000 from futures overall. So the moment we are losing 5 lakh net, that is another 10 lakh from here. So we'll be closing down all the futures. So another 10 lakh loss from this point, we'll be closing down all the futures. So we have quite a lot of exposure towards IT from TCS, Mindtree, and we have some exposure towards HDFC Bank also. So even today, Bajaj Finance has performed fairly badly. So overall, this is with respect to our trades, what we hold and how it is going. And over intraday also, I think you got to see the trades what we did. It didn't go in our favor. So some were the algo orders which were pushed. So even that got stop loss triggered. And even the first intraday trades which we took, the one move which we saw in the middle from 38 350, it suddenly fell towards 38 200. So that hit all our stop losses, and it bounced back from there. So somehow the day didn't go well, but like overall it was a pretty nice day because we started off on a good note because of our positional trade. So intraday didn't go that well, but let's see how the market goes tomorrow. At least I am expecting there would be some kind of a gap up or a gap down based on the US event. So very rarely in such cases you do expect the markets to stay flat. In case if we see a flat opening, then that is of a completely uh, so then the amount of decay will be huge. So we will be getting again around 2 3 lakh at the opening itself. So we can try to capitalize on that. So tomorrow, even if let's say we end up opening 2% gap up, so or 1% gap up, we might not be losing much with respect to the option trades, but futures will help us gain quite a lot. So what we'll be gaining from futures is going to compensate well enough for the options. The only risk what we have is the downside. So in case if we open, let's say 500 points lower, then we are going to get double hit, one from futures and one from the positional trade, where we are going to lose around 3 lakh. Anyways, we'll be updating tomorrow with regards to what happened to our trade and how the positions are going. And yeah, I think we also came more or less towards the close of the market. uh, I'll be catching you soon in another live session. Maybe we can take the last 3 4 minutes for any addressing of any questions, and I will be catching you soon in another live session sometime soon. Most probably the next to next week we'll be going one more live session, and on Wednesday itself, and we'll be catching there. So we will not be doing live on expiry because uh, we'll be taking a lot of quantity trades. So we would want to have a full focus on trading. Then so now the thing is we can have some discussions here while we are trading. We can also have some discussions. So that is something which we won't be able to do while we are do trading on expiry. So coming to overall P&L today, if you look both options and futures together, then we don't have anything. So it's no profit, no loss. So 4,000 rupees profit, which is no profit, no loss. When you look only at options, we have 2,20,000 rupees profit. And when you look at futures alone, we have 2,20,000 rupees loss. BTST trade is a 1,500 quantity short straddle carried at 38 300. Thank you so much, Ashwin. Yeah, thank you so much, sir, for. So this ratio spread and also about building a system and how to automate it will be coming out with videos soon. Most probably by the weekend, this week or next week, we'll try to come out with videos. So then I'll just be closing the live stream. And if you have just liked the whole live stream today, do not forget to hit the like button and also share this video and subscribe to Optionables.